announced that he's over at Microsoft. Satya also, obviously has to make sure that the Microsoft stock is performing well. I don't know if he can flip back on that, so it's a really sticky situation. It's unclear. I have no idea what's going on. I don't think that OpenAI employees know what's going on.
Matt, much of this is about a concern of the pace of innovation. Have you ever had any concern, or indeed the ability for OpenAI to live up to the amount of demand that we were seeing as well?
OpenAI has created something that literally is magic. They're on the forefront of AI. They're the soul of, no matter what anybody wants to say, they're the soul of the AI community and the movement right now. In terms of, have I thought about, is AI going to go too fast or is it going to go too slow? I think that this disruption is definitely causing it to go slower, and I would like it to go faster, as well as a lot of people in the AI community. We rely on this technology. It's allowing you to put human-like intelligence inside of your code, which means that the program can write content, it can talk like a human, and it can make reasoning decisions like a human. It can be autonomous, and it's just getting better at a breakneck speed. So this disruption with OpenAI, for myself and for anyone building on top of this technology, means that is it going to go slower? Is it going to be pulled back? What's going to happen next? This is not an ideal situation by any means.
What do you think it means in terms of your desire to work with a newly formed unit within Microsoft, or indeed with other competitors, Matt?
I think that OpenAI was seen as someone that you couldn't beat. It was too big to beat. And one of the interesting things that is happening because of this weekend, because of all of this chaos, is now, no matter what happens, let's say they bring back Sam, everybody stays, OpenAI is not infallible. They are someone you can beat now, and that actually opens up a tremendous amount of opportunities for new people, whether they're ex-employees of OpenAI or other entrepreneurs, to go start companies that compete with OpenAI. And I think that that's going to happen. This leaves a huge opening for that. In the event that a lot of people leave OpenAI, maybe a bunch join Microsoft and go join Sam and Greg, a lot of other ones are going to start companies. And I think more capital than ever is going to flow into AI. Just this year, I started a venture capital firm called Theory Forge Ventures with Ben Park to do just that. And this is a sad situation with OpenAI. It makes me sad, but at the same time, investors are going to be clamoring in.
Matt Schlicht, Octane AI CEO and indeed a venture capitalist, we thank you so much. Coming up, so much more on the OpenAI drama with exactly that, another conversation on the venture space, on the investment. We're going to have Conviction founder Sarah Gao, and that's next. This is Bloomberg Technology.
The younger generations are more, of course, pay more attention to sustainability, and so they are looking at brands that are greener. But you have to make sure you're authentic, because they hate greenwashing. But what is very important to remember is that none of them, whether they're young or not, will ever sacrifice product quality and efficacy to sustainability, which is why part of the big transformation of our R&I, where there's this €1 billion we spend every year, most of it is spent on transforming our formulas from petrochemicals to biosourced ingredients and green sciences, but without losing the efficacy.
where we left off with our OpenAI conversation, the drama, the impact on the AI landscape more broadly. Sarah Gao, founder of Conviction, it's a venture firm purpose-built to serve AI-native companies. And when we were just talking to Matt Schlicht, who thinks that more innovation, more startups are going to come of this. Sarah, do you abide by that silver lining to what feels like a cloud right now?
I would start by saying I have such enormous respect for the work Sam and Greg and Ilya and the entire OpenAI team have done over the years, right? So before we talk about silver lining, I think we should talk about the contribution they've had in terms of igniting a technology revolution. It's just very sad to see it happen, and sincere respect to Ilya for, a public apology for something he regrets, whatever the outcome. This is his life's work, and he has made a tremendous contribution to the advancement of AI. And many of the startups that we back and partner with OpenAI in, like Harvey, which is legal AI, and a portfolio company for OpenAI, we benefit from all of that innovation. I think that being said, the ecosystem, the landscape is much more open than it was a week ago, which is wild to say. OpenAI is both revered and feared, and in its current state, it is much diminished.
Sarah, delighted to have you on the show. You know everyone, you know the players. You yourself are not invested in OpenAI, but the ecosystem you are so closely connected to. Just tell me your reaction, frankly, how you felt this weekend watching that unfold.
Yeah, I mean, I started with sort of respect and sadness for friends who work at OpenAI. I think my secondary reaction is really just, as champion-level business people, you have to hand it to Satya and Kevin in managing all of this. The multiple on Microsoft stock since Satya took it over in 2014 is up 10x from what was already one of the largest 5 companies in the world. So I'm just floored by their ability to navigate the situation. It's incredibly hard to be this aggressive and strategic in steering so large a ship and anticipating the tidal wave and coming out so far ahead. So all roads from here are paved with gold for Microsoft. I think going back to the first question, we are an AI-focused early-stage investing firm, right? And so a part of it is a recognition that there are opportunities at every layer, which we continue to believe, but now even more so for the independent foundation model labs, such as Mistral and Inflection and Anthropic. And I think there's increasing interest in open source from corporations and developers, just in having more control over their own models and running them on their own infrastructure and inference platforms like Base 10. And so there will be continued capital for startups making these bets from investors like in Conviction, and of course for full stack and application level companies as well.
You've invested in startups building their own large language models. You've interviewed on your podcast leaders at some of the firms with making bigger models with many more billions of parameters. Does this weekend make it a more competitive marketplace for building generative AI technology?
I think companies are, so there's sort of 2 dimensions, right? There's what it takes to compete, and of course, the reaction from the ecosystem of customers and developers. This set of events, of course, gives all of OpenAI's customers and developers pause. They're making long-term bets, and they want to understand the incentives and staying power of their partners. In my experience, startup founders are sometimes reluctant to ask for the early check or seem too profit-seeking or capitalist to their customers. But I think transparency is key. That's a lesson from this weekend. I've heard so many customers ask startups, how are you planning to make money? Or even ask me as an investor in these startups, is the business viable? I am willing to pay, but I don't want to make the wrong bet. Yeah. Will they make it? And the nonprofit board here is explicitly prioritizing other goals they have above customers and developers. And so I think that does change the ecosystem. In terms of other opportunities, we should not trivialize the work that OpenAI has done over the years, right? Creating foundation models is a huge effort. And so from an infrastructure, data partnerships, tooling, and talent perspective, I think You know the ship of Theseus? It's a thought experiment. Like if you rebuild a ship entirely with new parts, is it the same ship? It's a question of identity, and it's often applied to human consciousness in sci-fi, but it applies to organizations too.
Right.
If OpenAI has the weights and then all of the advantages that we were just talking about, they're huge. But an organization is also its own culture. And,
Yeah, Conviction founder Sarah Grow, it's just great to have you on the show and get that perspective. Thank you. This is Bloomberg.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
Today's CFO has to be much, much more than a bookkeeper.
One of the most important things is looking around the corner.
We have to let go of the traditional legacy department store.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
You also have to be credible business leaders in order to really impact the business and steer the direction.
We are like biologists. We need to deeply understand the financial DNA of a company.
People just come with a playbook and say, okay, we're going to roll that. Don't do that. Think longer term.
It's an amazing time to be in this role. It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the chief future officers of some of the world's most influential companies. A new episode every month, only on Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials, find people, analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Some breaking news for you right now. The United States, the Justice Department to be exact, is seeking more than $4 billion from Binance, that of course being the cryptocurrency exchange, to end a criminal case. It's a years-long investigation. Negotiations between the DOJ and Binance include, in fact, the possibility that its founder, CZ, would face criminal charges in the United States under an agreement to resolve the probe into alleged money laundering, bank fraud, and sanctions violations. That's some update on crypto. But Ed, back to our key number one story.
Okay, all change at OpenAI, and my goodness, how quickly things do change. Earlier this year, Bloomberg's Emily Chang caught up with now former OpenAI CEO Sam Altman to talk about his relationship with Microsoft. Listen to this.
How would you describe your relationship with Satya Nadella, how much control they have? You know, I've heard people say, you know, Microsoft's just going to buy OpenAI. You're just making big tech bigger.
Company's not for sale. Like, I don't know how to be more clear than that. We have a great relationship with them. I think it's these like big major partnerships between tech companies usually don't work. This is an example of it working really well.
Okay, fast forward to present day. This is the latest. After a game of musical chairs, Microsoft announces that Altman and his co-founder Greg Brockman will join the company, will join Microsoft. This announcement literally on the heels of a frenetic weekend in Silicon Valley following the aftermath of Altman's firing on Friday. Microsoft shares continuing to push higher in the session, up 1.9%. Bloomberg's Dina Bass is our Microsoft correspondent, and alongside the rest of us has been all over this story all weekend. Let's first talk about this new unit within Microsoft. Satya announces it late last night. What do we know?
Game of, musical chairs and Game of Thrones. So what we know is that, Microsoft, Satya spent the weekend trying to figure out a way with other investors to get Sam and Greg reinstated to the company. As of late Sunday night, there were conversations with Mira Murati, the interim CEO, trying to do exactly that. Those with board members, her conversations, those conversations failed, and so Nadella had to go to Plan B, which was, okay, we'll just hire Sam and Greg ourselves, because the concern that Microsoft had was, when there's all this upheaval at OpenAI, you start seeing everybody threatening to jump ship, and you saw that massive outpouring of support Saturday night for Sam. That it very much imperils not just Microsoft's $13 billion investment in OpenAI, but Microsoft's entire strategy. Satya has revamped the entire company's product line around artificial intelligence, and that artificial intelligence depends on OpenAI. If OpenAI ceases to exist in the way that Microsoft had expected, that is an enormous problem for Microsoft.
But for now, the deal brokering seems to be in its advantage, and Evercore ISI saying that the hiring is a clear win for Microsoft. It's basically an acqui-hire. What are some of the difficulties around doing this culturally and indeed potentially even regulatory in the longer term?
Sure. We don't know what if regulators will look at this. I heard the discussion and Emily's question of, well, why not just have Microsoft buy them? Microsoft, both because of the complicated nonprofit for-profit structure of OpenAI and for regulatory reasons, I really could not have just outright bought OpenAI, as most experts think. What are the problems? Well, Microsoft has its own artificial intelligence effort. It's been working in that area for more than 2 decades. And there has been some tension over the last couple of years around the way in which Microsoft and Nadella chose to really prioritize, both in terms of resources and focus, the work of OpenAI over some of Microsoft's internal projects. Some of the people most concerned about that perhaps have left Microsoft, but there's still AI researchers there. So there's some question of how you integrate those things without making, a real sort of, issue for the people that are already there. Then there's just, there are more mundane details. How many OpenAI people is Microsoft really going to hire? How do they decide to, how do they compensate them? How do people already at Microsoft who had a salary freeze this year feel about that compensation? All sorts of cultural issues. That said, people who say people from outside Microsoft cannot do well at Microsoft, I think are potentially thinking about a Microsoft of 10 years ago. Satya has acquired companies like LinkedIn, like GitHub, let them run on their own, and had them function quite effectively within Microsoft. He's also hired executives, and here I think of CTO Kevin Scott, who leads the AI effort, executives from outside who have become very senior and very important to Microsoft in a way that perhaps was not easy for outsiders to do in the office.
Many noting the title of Sam Altman being that of a CEO internally. Dina Bass, we thank you so much for all the iterations for that publicly side of the company. And let's just talk about what's left at OpenAI for a moment, because late Sunday, Emmett Shear was appointed interim CEO of OpenAI after the board quietly vetted candidates starting on Saturday night. Now, here's what we know about the appointment. Sources tell Bloomberg that Shear was seen as someone that can lead a large engineering group, but also as someone who recognizes an existential threat from AI. Like some members of OpenAI's board, Shear has ties to the so-called effective altruism movement. Shear has stepped down as CEO of Amazon's game streaming site Twitch earlier in the year, and in May, he actually joined Y Combinator as a visiting partner. Let's get a conversation going with Zachary Lipton. He is the Chief Technologist and Scientific Officer over at Abridge. It's a company using generative AI for automatic drafting of after-visit clinical notes. You're also an assistant professor of machine learning at Carnegie Mellon University. Zachary, the fact that you really focus on understanding the social impacts of machine learning in a philosophically coherent way, is the way it says on your website. Is that kind of what the tension was here, ultimately, on OpenAI? Philosophical at that?
I think it's important to draw a big distinction. There's a contingent of this community that is more focused on the idea of AI as a potential existential risk to humanity. And there's a bunch of us who are more a group of social scientists, ethicists, some maybe socially inclined computer scientists who've looked at these problems from different angles, more focused on near-term terrestrial actual harms of AI systems as operationalized in businesses today. So there's this a lot of work that I think very few people disagree is like serious or real problems and important today about understanding how we think about privacy, accountability, transparency, where liability goes once you have a greater degree of automation in our decision-making systems. But on the other side, there's a group of people who are more focused on something what they call X risk, or this idea that AI is careening towards, by mechanisms known or unknown, that there's this marching progress towards something that is a different kind of threat that needs to be regarded as more of like an epoch-changing event, something more analogous to nuclear weapons. And I'd say that like my work sits a little bit more in what they might call near-termism, and this group of effective altruists, their philosophical position is that they think that however small the threat, if the risk, if they're wrong, is a wiping out of humanity, that this is the most important priority in the world. And I'd say it's a relatively fringe belief among technologists, among business people, but it does have some very well-heeled backers, and it does have quite a bit of a foothold in San Francisco,
right.
And in particular research labs. And OpenAI does have some amount of influence of this existentialist thinking.
Right, Zachary, whether the existential threat is a fringe idea or not, what is, I think we can agree on, the events of the last weekend being monumental, I guess, within your career, both in academia and building generative AI tools. Just reflect quickly on what you made of the last 48 to 72 hours.
Oh, it's quite wild, given that when I entered the field 10 years ago, I had to explain to my parents what machine learning and AI were, and they were just glad that I wasn't, trying to make a living playing the saxophone anymore. So to go from there to it's the front page of the New York Times that there's a kerfuffle at an AI startup is pretty wild. I think in general, we're watching before our eyes the maturation of an industry. And a lot of how we got here, and I think you see this all over the economy. I think we saw this with the dot-com bubble, and some amount of discord and some amount of insanity as we went from a sort of first-generation set of companies with strange governance structures and a certain kind of velocity to a more mature environment that followed. It didn't spell the doom of the internet, but it certainly was like a growing up period. I think what we're watching before our eyes is us moving from a period of this being brand new technology and people behaving in strange ways that are sort of exceptional by any normal standards to a period that's going to follow, which is going to be more robust. Right. It's going to involve people depending on a much wider and more stable ecosystem of services provided by a larger set of companies.
And remind our audience that almost 600 people representing the intellectual capital within OpenAI are currently threatening to leave and go to Microsoft. So Zachary Lipton, Abridged CDO and Carnegie Mellon Assistant Professor of Machine Learning, breaking it down. What a weekend it has been. Thank you. All right, we had that breaking news that we had earlier on Binance. Bloomberg's Sonali Basak running to set. What do we know, Sonali?
We know a few things. We know that there's not clarity around the structure of the deal here, but it could cost as much as $4 billion. Now, this is a years-long probe by the Justice Department into Binance to look at alleged money laundering, bank fraud, sanctions violations, and this would create an end to that saga for Binance versus the Justice Department. Now, we also know, according to Bloomberg's reporting, that Binance has sought to minimize its penalties and has even sought a deferred prosecution agreement that would put an even further end to prosecution so long as Binance meets certain thresholds, usually a penalty and a detailed statement of facts outlining what exactly had happened here. So this could come as soon as the end of the month. We don't know the total terms of the deal itself, but again, it could be as much as $4 billion sought from Binance to end this case, and it would certainly be one of the largest penalties tied to a crypto matter in the United States, let alone worldwide.
Shonali Basak with the breaking news. We thank you so much on all things crypto. Now, look, some other news that we're following for you. Ex-CEO Linda Yaccarino has acknowledged that some advertisers are taking a break, a pause from the platform. Now, this pause follows some outrage over anti-Semitic content and commentary on X, some of it, in fact, seemingly endorsed by the site's owner, Elon Musk. Now, in a memo to staff on Sunday, Yaccarino blamed, quote, a misleading and manipulated article for this pause in spending, referencing, in fact, a Media Matters piece that said ads from big brands were being placed near offensive content. Ed.
All right, coming up on Bloomberg Technology, Tusk Ventures CEO Bradley Tusk joins us. We go back to OpenAI, the drama, and its impact on the AI space. We have to ask questions about corporate governance. That's coming up next. Also looking at shares of General Motors, pairing some of their gain in the session up 1.8%. The news, curiously timed, late Sunday night. Kyle Vogt resigned as the CEO of Cruise, General Motors' autonomous driving unit. GM shuffling the deck, putting a lot of long-standing GM execs to run that unit, but goodness knows what happens next. This is Bloomberg Technology.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacqua, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
What are some of the measures the government are working on in terms of addressing the artisanal challenges there?
Oh, a host of them. But fundamentally hinged on two policy pillars. One is reformation, which is reforming the sector, licensing regime, getting them equipment for the extraction of the gold from the ore without the use of mercury. As you know, we are parties to the Minamata Convention, and therefore we respect the dictates of the Minamata Convention. And then the enforcement regime, deploying law enforcement to make sure that people are arrested and so on and so on. So we're making that effort. But my point is that, my fundamental point is exploiting these mineral resources in a sustainable manner are not mutually exclusive.
Yep.
I think that they can peaceably coexist. You can exploit the resources, and several countries have done so. I don't want to mention, give examples, but I know of countries which have gone about their mining sector and their mining industry in a manner which is also protected the integrity of the environment and the climate. We can do all of that. My friend Josephine mentioned the day we'll use solar to mine and use gas and all of that. These are all very ambitious technological interventions we can rely on. And Ghana is doing just that.
This is Daybreak Europe. I'm Kriti Gupta. Let's get to the stories that set your agenda.
Taking you from the U.S. markets close.
A lot of this was priced into the U.S. session.
To the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
course, we return to the drama consuming OpenAI and how it could impact the startup space more broadly. After OpenAI CEO Sam Altman was ousted by the company's board on Friday, prompting a campaign from investors and staff to bring him back, well, now Microsoft has hired Sam Altman, while former Twitch leader Emmett Shear is taking over as OpenAI's interim chief executive. For today's VC Spotlight, let's bring in Bradley Tusk for his read on all of this. He is the CEO of Tusk Ventures and also the author of the upcoming book, Obvious in Hindsight, satirical behind-the-scenes look at how technology and politics sort of intertwine the ways in which decisions are actually being made by those in power. Is all of this obvious in hindsight when you look at the corporate governance structure?
Yeah, it absolutely is. I mean, this was an insane structure, and this one's kind of unique in that you had such a big underlying company that is for-profit with this nonprofit board on top of it. But I think it really raises questions about B Corps, and I think about ESG to a certain extent. And there are fiduciary duties and there are incentives that need to be aligned. I think when you have boards that clearly have sort of other incentives and other ideas and that aren't about the shareholders and aren't about the employees and aren't about the customers, you can create a lot of problems, which is what just happened.
Let's just go through ultimately what this board, how it differs from others. It's made up of, I think, only about 4 people now because of a few people have been, exactly. Greg had been fired, Sam Altman had been fired, but others like Reid Hoffman had left over the course of the last year or so. And ultimately, this is a not-for-profit board where the whole thesis was that it was the mission over profits. Now, is that replicated anywhere else? And is this something that ultimately ventures should be learning from?
Yeah, so I haven't seen this specific structure anywhere else, and I can't imagine we ever will again after the debacle that this all was. But even when you get past that, B Corps, which are kind of hybrid versions of what we're talking about, where they're public corporations and they're for-profit, but they're meant to be doing social good, at least I think VCs should be taking a hard look at the bylaws of the boards of B Corps, because then, by the way, I've got 1 or 2 in my portfolio, and we're taking a look at it right now, because I don't want a situation where the board has a moral stance or an ideological stance, and that really comes at the best interest of the company itself. Of course, there's always room on every board to talk about morality and ideology and everything else, but at the end of the day, you have a fiduciary duty to the shareholders or to the investors or whoever it is, and that's what's got to be met. And so while I'm sure most B Corps sort of are okay, it seems to me that the potential for what we saw does exist. And when we're talking about companies like Allbirds and Warby Parker and Ben & Jerry's, we're not just talking about kind of no-name companies here. So I know that I'm concerned, and I think other VCs should be looking at it too.
Bradley, I want to bring an update to our audience. In the private markets, I think this is important. Joshua Kushner, who's the founder of Thrive Capital, has posted on X, "Every problem has a solution. In the background, there is a tender offer worth hundreds of millions of dollars that is in question here, running this month, where OpenAI employees were due to sell shares with Thrive Capital leading that round. I know you're not an investor in OpenAI, but is there any world in which that tender goes ahead?"
Yeah, I mean, I think to a certain extent it has to, because you have all of these employees who are probably not making that much money in terms of salary, because that's what happens when you work at a tech startup. And the promise is the pay, the rainbow, the pot of gold at the end of the rainbow. And a tender offer offers liquidity for people who have been counting on it and relying on it. And you have employees who want to move homes or pay for their kids' school or whatever it is. And so I think, whether it's Emmett Shear or whoever's running that company, you have a responsibility, because you're going to have a really unhappy workforce. You already have a workforce where over 100 people signed a letter threatening to quit. And I think this would just exacerbate the problems. The question is, at what valuations? They were talking about an $80 billion valuation on the secondary market for the tender offer. I think that if they can kind of get the ship righted and just wait a few weeks, it probably goes back to normal. But if it continues to be chaos, then obviously investors are not going to pay up at that amount, and the shareholders, the employees, are going to lose value.
Tusk Ventures founder and CEO Bradley Tusk, great to have you here on Bloomberg Technology. Thank you. Now, coming up, more coverage on the ongoing drama between Sam Altman, OpenAI, and Microsoft. We will bring you what happened this weekend, the inside scoop from the best of Bloomberg. This is Bloomberg Technology.
financial crime ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in?
I'm in.
I'm in. We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
DOJ or other authorities
could face bigger challenges next.
It was going to keep reading World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
From the world of politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg. Context changes everything.
Okay, let's wrap up our coverage of Sam Altman's exit from OpenAI with the Bloomberg Big Take. We're joined by Bloomberg's Max Chafkin, who penned that monumental Business Week piece, but also Bloomberg's Ashley Vance. We have been in the trenches together for 3 days, uncovering everything that happened from about lunchtime Friday onwards. Ashley, I'll start with you. Just reflect on everything that we've learned, but also this kind of side scoop we had that Sam Altman was out there trying to raise tens of billions of dollars for a completely different chip company. What's that about?
Yeah, I mean, there's just so much going on here. Sam is a very ambitious guy, so he's out trying to make this new artificial intelligence chip that would compete against NVIDIA, which OpenAI is buying a ton of NVIDIA chips, and you know, just another indication of all these other things going on top of OpenAI that I think some of the board was concerned about.
And it sort of links towards the headline of your big take, the doomed mission behind Sam Altman's shock ouster from OpenAI. A doomed ouster, but also perhaps a doomed set of aligned or misaligned focuses coming from people who lead OpenAI.
Yeah, I mean, you had this nonprofit board where a lot of people were really concerned about these apocalyptic AI scenarios. And you had Sam Altman and kind of his allies who were sort of using the promise of or the potential of an apocalypse to sell this new technology. And those two things collided, right? I think Sam Altman saw that as kind of a great way to market OpenAI. But you had people who actually believed it and then who were getting increasingly worried over the past few weeks.
Yeah.
Right. Ashley, let's be honest, you and I had heard pretty early in the day Sunday that the board was digging in, that there would be a new CEO. No one believed it. And now you have Ilya out with a tweet apologizing. Just your final thoughts.
Well, yeah, Ilya's doing, coup inception, a coup upon a coup. I don't think this is over. It sounds like all these camps are still fighting to bring OpenAI back. As of right now, 700 of the 770 employees have vowed to leave the company if Sam and Greg aren't brought back. And so I don't think this is done. We still got another day or two of this.
Yeah, I just want to hear from Max, the weirdest line you heard this week.
I mean, the idea of a counter coup that is taking place while the same coup is going on is just like Ashley says, it's too crazy. And we're talking about, remember, this is like the most important part of one of the world's largest companies. Microsoft is totally dependent on this relationship with OpenAI. So seeing all of this chaos unfold around something that's so critical, that so much money, many billions of dollars are baked into, is just something.
Max Chafkin, it was something that you wrote. Ashley Vance, it was something that you broke. It was an extraordinary Herculean effort from all three of you. And that does it for this edition of Bloomberg Technology. Ed, I mean, we didn't even get to talk about the DoorDashes being done over the weekend.
They went for DoorDash for food to OpenAI HQ. There is so much to recap from a crazy weekend on OpenAI. So we have a podcast. Check it out wherever you get your podcast, Apple, Spotify, iHeart, and on all the Bloombergs. From SF in New York, this is Bloomberg.
That's me, Max. What's up? How are you? I have been writing about Wall Street for almost 15 years. And what that means is I write about feuds and rage and rises and falls and comebacks. And every now and then, I also write about a couple of villains. Thank you so much. And now, I am about to do something new and very, very scary. We are making a show, and it's based on Bloomberg Businessweek magazine. So what is this show about? It's a show about money, power, culture, pop business. We're gonna ask complicated and profound people about their ideas, their careers, their lives, their risks, their failures, their imagination.
It's so incredibly liberating not to care what other people think.
I was giving my tools to other communities. I wanted to bring those tools home.
Tune in. Please, really actually tune in. I desperately need an audience.
Wall Street is waking up. Europe is already trading. And Manus Cranny and Danny Berger are making sure you have the news, data, and analysis you need to set your agenda. Micro, macro, and everything in between. Manus in New York and Danny in London follow the money around the globe. Take a daily deep dive into risk and help you make informed decisions for your trading day. Watch Bloomberg Brief, weekdays at 5 a.m. Eastern, only on Bloomberg. Context changes everything.
This is Bloomberg.
Welcome to Bloomberg ETF IQ. I'm Katie Greifeld.
And I'm Matt Miller. We're going to take a break from talking about OpenAI for 30 minutes.
Reluctantly, of course.
Let's get to the biggest stories in the more than $10 trillion global ETF industry. Bitcoin drives higher as investors anticipate the pending approval of a spot ETF. Investors and firms eagerly await the SEC decision.
And in just a few moments, we'll be speaking to someone heavily involved in that race, Ophelia Snyder. She is founder and co-president of 21 Shares, who's partnering with Cathie Wood's firm for a spot Bitcoin ETF.
And we look at an ETF that's as sweet as honey. It tracks companies that have responsible growth.
Matt, before we get there, as always, Eric Balchunas from Bloomberg Intelligence. He's here with us now. He's looking at the flows. Eric, what do you got?
Katie, Matt, thank you very much. I got good news in the flows. This might be the best week I've seen all year, maybe outside of a couple of weeks during the summer when equities were really rallying. Look at the top, the Qs, 5.5 billion. That is one of the top 5 best weeks for the Qs. And remember, that thing launched in the 90s, so that's a big deal. IWM, small caps, right? VU is the Vanguard bid, 1.6 billion there is good. RSP is equal weighted S&P. And then you've got junk bonds. You go down, you got IVV, VTI, even some tech in there. Very, very good flows. And look at the total number, plus 30. Anytime flows and ETFs get big, that tells you the trading crowd is excited. Let's look at the outflows, and the news gets even better. Yes, you got a little SPY in there. Let's ignore that because look at the month. It's still plus 7.5 billion, but SPY is in there. But if you go down that list, the top 10, you've got 5 Treasury ETFs in there, BIL, SGov, and 3 others. That's a good sign. Treasury ETFs, if you look over the past 2 years, have had their worst month in flows since the Fed hiking cycle began. So clearly investors are moving out of treasuries and into equities, which again would be bullish sentiment by anybody's view. Speaking of bullish sentiment, let's turn our eyes to the Bitcoin race, which we're going to discuss in the next block, and ProShares Bitcoin Futures ETF. Right, so ironically, this is the ETF that's probably going to be sort of under pressure or seeing some exodus once the spot ETFs come out because people prefer those. But until then, it's being used in the anticipation of those ETFs. So look, it had 1.4 billion in the Bitcoin mania of 2021 when it launched. That was the mania. It went down as everything cooled off, FTX, sort of come back. And then look at this year, boom. It's nearly doubled in assets in quite a short a time. So this thing's also seeing a lot of volume as well. So look, we got bullish flows in the equity markets and also in the crypto markets, Katie.
There you go, Matt.
Yeah, very interesting stuff, Katie. Thanks, Eric. Joining our conversation now is Ophelia Snyder, co-founder and president of 21 Shares. Great to have you here, Ophelia. Let me ask first about pending or impending or imminent. When do you think this decision is going to be released by the SEC? When will we see the first approval?
So I think that's such a hard question because I think there's this, right now everyone's watching this race on like a minute by minute, day by day basis, week over week. Is it today, tomorrow? I think that's a challenging way of looking at this. I think the clearest indication is that we're in a pattern break. I think historically you've seen the type of engagement we've seen from regulators on these documents have followed a certain specific pattern around delays and around how they're actually engaging and also quite frankly like which documents they're engaging on. I think we're seeing a little bit of a difference there now with people actually, providing amendments to documents and providing a little bit more color on how these products are actually going to look like in market. And it's really positive because very, very candidly, change in behavior might actually result in a change of outcome. And that's really exciting.
Well, let's talk about the fact that, you are engaging with the SEC. Of course, we've seen plenty of amendments come through, both from other issuers, but coming from, of course, 21 Shares and ARK. And of course, one of them that hit this morning actually had a fee listed in it, 80 basis points. Obviously, I know you can't say too much about an active filing, but how are you thinking about pricing this product? Obviously, for the U.S., these don't exist yet. There's not really a blueprint here. So just wondering if you can shed any light on your thought process.
Yeah, happy to. I think pricing for these products has always been a little bit challenging, I think, and different markets have actually ended up pricing quite differently. Part of the reason for that is there's quite a bit of inherent complexity to these products, and most people kind of take for granted that, like, actually, you're going to get custody and administration services from the same people. You're going to get accounting and you're going to actually have packaged and bundled services, and that's really not true in crypto products. You're actually bringing in different providers for almost every portion of the product, and that does increase the operating costs. So I think we really did expect these to price a bit higher than what you would see from a more traditional ETF, especially something that's got that kind of long exposure in it, because there is quite a bit of incremental infrastructure and expertise baked in here. But we think it's a reasonable price, and where we think we actually can sustain those markets long term, and quite frankly, where we think, based on what we've seen from other products in the market, we think an area that the market will support.
Okay, so let's talk about plumbing for a minute. Okay, when you create shares of an ETF, you can do it in kind or using cash. Cash means the AP gives cash to the issuer. They touch the Bitcoin. In kind would mean the Bitcoin is touched by APs or market makers. And because brokers can't touch Bitcoin, they'd have to use an unregistered subsidiary. So I've been hearing the staff is kind of preferring cash creations because you don't have to deal with unregistered brokers. You move everything to the issuer. But that is not ideal for the investor. Wider spreads and the taxation isn't as good. So that's what I've been hearing. You guys are sticking to in kind.
That's deep, huh?
I know. I try to make that as it's a big issue, though, and it's something that's going to play out in the next 7 weeks, because you're not alone. I think other issuers are going to try to fight the in-kind fight. Some will go cash. How do you see this playing out?
So I think, like all of these discussions, at the end of the day, we're trying to bring products to market that are what is best and most efficient to investors within the confines of what we can do from a regulatory perspective. And if you look at these products in other geographies, you do see quite a bit of in-kind. And even places where there are cash creations, those cash creations under an American framework would look a lot more like an in-kind transaction because of the inherent behavior of the underlying SPV or trust in the structure. So I think there's a outstanding question here on how you thread that needle. This is quite similar to gold products. Gold products do operate primarily on an in-kind basis. And I think there's going to be some interesting discussions as we move forward in figuring out what the most appropriate structure is for this market. And that's, I think, an outstanding point. And even amongst issuers, and you can see this across the filings, there is still differences between how different people are approaching this today.
No matter how it goes, you're one of the best positioned people in the world to tell us what kind of interest there is in a spot Bitcoin ETF. And how do you think that's going to move the market in terms of, I don't know, outflows from BITO or the price of the underlying asset?
So I think it's pretty obvious. Spot products have broader appeal. They're easier to understand. I don't think they are futures killers, I think, in the way these have been positioned to some extent. I think there's still a role for futures products to play in this market. I think that is a smaller role than what spot will play. We've seen this in other geographies. One of the big things people don't often think about is that if you're an RIA or you are an asset manager and you somehow have discretion for somebody else's portfolio, how are you actually entering this space is still a very big question. It's really hard to set up your own system. You would need a new prime broker, you need new custody, you need new frameworks, you need new control provisions, you have to change the way you do compliance. There's a bunch of things that as a manager you would need to add as a bolt-on to your existing stack in order to be able to effectively offer these products. That may or may not make sense for all managers, unless that's going to be a really material part of your business. So these products allow both individuals who might not want to set up their own infrastructure to access these underlying assets, as well as, quite frankly, managers who may not want to set up that infrastructure. So I think you're going to see quite a bit more interest in these products than futures, especially over the medium term. And if you look at the broader market right now, I think we're seeing quite a nice resurgence and interest in crypto and crypto-linked products, and quite frankly, in activity in the crypto market in general. We've been talking now for a while about bears are for building. This idea that during the wintertime, crypto companies go away, and that's where they make these really big and important breakthroughs in terms of innovation, in terms of new technical development, new use cases, better access points. It takes a while for those things to be developed, and we're just starting to see those come to market. And I think the combination of better access and, quite frankly, really interesting developments in the underlying technology are coinciding for a potential change market outlook. And I think you're starting to see some of that in the data already.
I'm going to cut that soundbite and use it on the crypto program tomorrow. So thank you very much, Ophelia Snyder of 21 Shares, for coming in. Treasury auction results coming out over the past few minutes. We're getting the details on the sale of $16 billion of 20-year bonds, and it is driving long-dated yields lower and stocks higher. You can see here that it doesn't look like there's a horrible tail like the one we saw after the 30-year auction, I guess a couple weeks ago now. So it does drop down. Investors are buying that debt, and the yield is 4.7658. Coming up, ETFs are preparing for a big bump in assets as mutual fund managers face a rough reality. That's next. This is ETF IQ on Bloomberg.
The younger generations are more, of course, pay more attention to sustainability, and so they are looking at brands that are greener. But you have to make sure you're authentic because they hate greenwashing. But what is very important to remember is that none of them, whether they're young or not, will ever sacrifice product quality and efficacy to sustainability, which is why part of the big transformation of our RI, where this €1 billion we spend most of it is spent on transforming our formulas from petrochemicals to biosourced ingredients and green sciences, but without losing the efficacy.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
Welcome back to Bloomberg ETF IQ. I'm Katie Greifeld. Time now for the ETF brief, where I walk you through the trends and the stories that caught my eye in the ETF industry. And we start with ESG. It's Eric's favorite topic. You take a look at the outflows this year, and it's been pretty staggering. Nearly $8 billion has exited so far in 2023. As you can see, that is a record. And that follows several years where you saw quite a lot of money come in to the space, close to $70 billion or so over the previous 3 years. So a big shift in sentiment there. Let's also talk about Argentina, because you talk about a shift in sentiment. Of course, we had that presidential election over the weekend. You saw outsider Javier Milei take the victory over the economy minister, and you can see the reaction in this Argentina ETF soaring by a record amount since it was launched in 2011. Trading volume also off the charts. Let's also talk about what Bloomberg Intelligence sees in the years ahead. This is a theme we talk about all the time on this show, basically the march from mutual funds into exchange-traded funds. Well, Bloomberg Intelligence estimates that the $18 trillion that's sitting in mutual funds, the majority of those assets will head to ETFs in the future, Matt. And of course, we've spent plenty of time talking about that.
Yeah, let's talk about it even more, though.
All right.
Like, can we spend enough time talking about this?
I think we can spend 30 whole minutes on it per week.
Let's bring in Bloomberg Intelligence ETF analyst Eric Balchunas.
I know him well.
Long time no see.
So talk to us about conversions, Eric.
Yeah, so what's interesting about this, rather than, okay, there's flows into ETFs, we all know that. We're calling it the triple C's, right? You've got conversions, classes, and clones. And what I mean by that, those are the three ways that legacy mutual fund managers can not just launch ETFs. I mean, clones are the way to do that traditionally. But conversions and making a share class, an ETF share class connected to your mutual funds, are literally ways to pick up all of your assets and your clients and move them into the ETF. We traditionally call it BYO, bring your own assets. That's different than organic flows, which come in from new investors, typically younger ones or advisors. But this idea of just picking them up and moving them over to this new format, all of your clients, because you're going to lose them if you don't, to be honest. This is sort of the pressure that's building. Not all mutual funds will die, but the majority of that $18 trillion will come over via one of those three ways. And two of them didn't really exist till 2 years ago, and the one of them is probably not even approved yet, but will soon.
That's what I want to talk about, ETF share classes, basically launching ETFs as share classes of your mutual funds. That's the Vanguard model, right? And you've seen Dimensional, et cetera, file for exemptive relief to do that as well. But I don't know, reporting this out, it seems like the SEC has under no pressure to actually grant that.
Yeah, that's why our prediction is over a decade.
Yeah.
We're giving time for the government to work that out. But we think with the big issues.
Right now, only Vanguard can do that.
Correct, and only in passive. So this would be active, the Vanguard patent, but in active. This would be major, because there's $9 trillion of the $18 trillion in mutual funds is in defined contribution plans, like 401ks and IRAs. Those are tougher to convert. And so you could stick an ETF share class in those, and people can move over without any tax consequences. Major. That's currently what Vanguard does now. That's why part of the reason they lead the flows by double almost every year now is some of the flows are coming from their own mutual funds. So like I said, there's going to be like this migration that will look like flows, but it's really actually existing mutual fund assets just being lifted up and put over. I think DFA, Capital Group, JP Morgan, they've been the tip of the spear of some of this moving over. And it's smart. I always equate ETFs to the music industry. The MP3 came out. CDs didn't go away instantly, but certainly over the next 10 years, people had to get with the program, and all these record companies sort of shifted over to streaming, and it worked. It hurt revenue a little bit, but they figured out new ways to make money, and that's sort of what is undergoing here. It's a massive platform change.
This guy's good.
There's some CDs that you can't get still on Apple Music or on Spotify,
What's a CD?
Into Another. You know the band Into Another?
No.
They had a record called Seamless. Great record.
Right.
Didn't really hit on the charts, and as a result, it's just disappeared off of digital.
And now it's lost to time. Gotta leave it there, though. Our thanks to our own Eric Balchunas. And still ahead on ETF IQ, we're going to drill down into responsibly growing companies with Liz Simi of Honeytree Investment Management next. This is ETF IQ on Bloomberg.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
Today's CFO has to be much, much more than a bookkeeper.
One of the most important things is looking around the corner.
We have to let go of the traditional legacy department store.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
You also have to be credible business leaders in order to really impact the business and steer the direction.
We are like biologists. We need to deeply understand the financial DNA of a company.
People just come with a playbook and say, okay, we're going to roll that. Don't do that. Think longer term.
It's an amazing time to be in this role. It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the chief future officers of some of the world's most influential companies. A new episode every month, only on Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
This is Bloomberg ETF IQ. I'm Matt Miller alongside Katie Greifeld.
Eric Balchunas from Bloomberg Intelligence. He's still with us for today's drill down where we focus on one ETF. Eric, take it away.
Katie, today we have BEEZ, B-E-E-Z. This is a great ticker, by the way. Honeytree U.S. Equity ETF. Now, seems like, okay, it was equity active, and it is, but it's ESG focused. So first of all, it is an unusual ESG ETF in my regard because it is active. There aren't that many of those. 64 basis points is the fee. This thing looks through the universe of stocks and looks through 25 criteria. It does eliminate weapons manufacturers and oil companies like a normal ESG ETF, but then it settles into a very concentrated portfolio, like 27 stocks is what it currently holds. And let's look at the holdings here. Again, this is a stock pickers ESG fund, and if you look at the holdings, it's not what you'd expect. Normally I open up an ESG ETF, I'm expecting to see Microsoft and Apple and the typical tech companies. You got a lot of different things in here. Sherwin-Williams, Home Depot. You look at the weightings and it's overweight industrials and materials and underweight tech and communications. You never really see that with ESG ETFs. And again, the concentration makes it sort of like ESG hot sauce, which hasn't been tried really. Let's look at the performance, and you can see BEEZ only week old. BEEZ, ESGU, traditional, and SPY. You can see this one's up a little more than the others, but this is the return stream you're going to get. It's going to have higher highs and maybe lower lows because of that volatility. But Katie,
to me, this is a way to complement the cheap beta core rather than competing with it. So in that regards, I think this has a shot to find an audience.
All right, Eric, thank you. And joining us, I'm thrilled to say, is Liz Simi. She is co-founder of Honeytree Investment Management. She joins us on set now. And let's start with bees. I like the way that Eric phrased this. This is a stock pickers ESG ETF. You look at the top industry groups: retail, healthcare products, software. Walk us through a little bit more about the thought process behind selecting these 27 holdings.
Well, we're sector agnostic, just to kick that off. We run a quantamental strategy. So we use quant tools to get down to a consideration set of about 50. And then we do a fundamental, traditional stock pickers fundamental deep dive from those 50 companies to the portfolio. So that's our process. Where we're unique is we use ESG data in both the quant process and the fundamental dive. And what we're looking for is responsibly growing companies. And we need that ESG data and that financial data to find those companies.
So, but what kind of data, or what do you mean by ESG? Like, is environmental stuff key to you, or is it all social and governance also important to you? And how do you frame that? It's a phrase that a lot of people have different definitions for.
One of the problems with ESG is everybody wants to dump everything in one of those three buckets, and that's just not how the data works. Most of the data that we use that would be considered ESG is tied to financials. And so we're looking for data that tells us whether a company is going to continue to responsibly grow, whether that's financial data or what I like to say is non-financial data, ESG data, because that removes the assumptions around ESG. And we look at all the traditional ESG data. We look at emissions, water use, pay equity, diversity in leadership roles, board diversity, a whole bunch of ESG data that points us to whether these companies are going to continue to grow at a responsible rate.
Let's talk a little bit about the criteria again. We talk about qualitative, right? That's what I think you're getting at. You have something called a Chick-fil-A screen, which it's catchy. I think I know what you mean, but explain what the Chick-fil-A screen is.
Back when we started in about 2019, so our firm's over 4 years old, we didn't, a lot of the ESG surrounded gender only. So women on boards, women in roles. And we thought our definition of diversity would extend beyond that to racial diversity, LGBTQ diversity, folks with a disability. And because you can't pull data on LGBTQ participation in the workforce or leadership, what we wanted is leadership to not, of the companies we hold, to not be attacking gay rights and things like that. And so we put in one of our qualification criteria that leadership was not outspokenly opposed to gay rights. And it was based on the Chick-fil-A former leadership, and Chick-fil-A has since actually walked back a lot of their, so they're not, but that's why the term, we used it originally. And it's interesting because it's become a much more pertinent topic in the last year or two, and we've just always thought it was important since the start.
It's still closed on Sundays, right?
Yeah.
It is.
All right. Good to know. I want to talk about ESG, though, zooming out and talking about the big, broad bucket of ESG. You take a look at some of the flow data this year. 2023, nearly $8 billion has left from ESG ETFs. Of course, the previous 3 years, it was just a record flood of money. Launching this ESG fund, and again, this is the stock pickers ESG ETF. How are you thinking about this launch timed against the outflows in this industry?
Well, Eric knows from my online escapades on Twitter that a lot of asset managers selling ESG products may not deeply believe in them. And I think there's a lot of consumers, to be super clear, there's a group of end consumers, retail and their advisors, who want exposure to ESG products, whatever those products might be. And no matter what anybody says about how bad ESG is and how bad the woke stuff is, that's not going to change their mind, just like you're not going to change an energy investor's mind about investing in energy. And so while there's been...
A lot of ESG investors invest in energy.
Exactly. And so just because it was the hottest topic on the planet Earth in 2019, and a bunch of pensions, fired BlackRock for being too woke, and put their money in anti-ESG ETFs, doesn't mean ESG is dead. ESG has been trucking along for decades. This is not a new thing. It being sold by large asset managers as their whole offering is a new thing. And I think what we're seeing is a lot of pushback to, the end client demanding believable ESG from companies whose values themselves, because ESG is not just the portfolio. It has to be reflected in the team running it and their beliefs for the end client to truly believe it.
Liz, great to have you in the studio. Hope we can get you back again. Thanks very much for joining us. Liz Simi there of Honeytree Investment Management. That does it for Bloomberg ETF IQ. I'm Matt Miller alongside Katie Greifeld and Eric Balchunas. This is Bloomberg.
Let's suppose you're on a plane and somebody realizes who you are. They say, I have $100,000. I don't know what to do with it. Where should I invest it? Where should they put their money?
So today, it's a easier decision than it was maybe 2 years ago because Treasury bills are 5%. So I would say, regardless of how much risk you want to take, you have to put a portion there. Then you would have to ask, really, an individual is the same, I think, as any institution. What is your time frame? Do you need to get access to this $100,000 in the next few weeks, the next few months, the next few years, not until you retire? And that will determine your investment decision.
So what do you think is the most common mistake investors make when they have 100,000, a million, or whatever they might have? What is the most common mistake you have observed that investors make?
I would say hubris and thinking you know more than you do, because every decision that you make has many, many layers. So as you're creating a portfolio, look at the risk as well, not just excited about the return.
And what's the best investment advice anybody's ever given to you?
Continue to learn about innovation in whatever you do, because that is where it's not exciting, that's where returns will go.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
I'm John Ehrlichman. Welcome to Bloomberg Markets.
And I'm Matt Miller. Let's get a quick check on the markets at this hour. Right now, we see a rally continuing with the S&P 500 up 2/3 of 1%. The NASDAQ gaining more than 1%. And by the way, we've picked up in these equity indexes because we had a killer 20-year auction. You can see right there at the bottom, 4 spot 7670, and the yield drops as investors buy those bonds after the auction. This is pretty much the exact opposite of what we saw with the bad 30-year auction that we had a couple of weeks ago. So that, I think, giving some confidence to this market that things look okay after $16 billion of 20-year bonds went off without a hitch. The record high of the yield on these was 5.25%, and now we're down at 4.75%. So things look a lot better in that sense to equity investors and risk asset investors in general, John.
Absolutely. And Matt, some analyst commentary, also part of the stock stories that we're watching today within the Dow. You've seen Boeing is the best performer. It's up close to 5%. Deutsche Bank with a pretty bullish view on the deliveries ahead and thinks the stock could enjoy more upside as a result. More cautious trading in homebuilder KB after Wedbush had some competition concerns. Those shares are off about 1%. Does feel, though, Matt, like most of the day is based around tech stocks, whether it's NVIDIA. We've got those earnings coming out this week, and NVIDIA's stock so far this month, at least in terms of the market cap, has added another $220 billion in value. And of course, if we're going to talk AI, we have to zero in on Microsoft. A lot of investors giving a nod of approval to Satya Nadella for his wheeling and dealing over the weekend and bringing Sam Altman in-house and still showing his commitment to OpenAI in a very fast-moving story that we're continuing to watch.
Yeah, it is the story that I think everyone was obsessed with all weekend long. It continues to have twists and turns that are amazing. The talk of Silicon Valley. Hundreds of OpenAI employees are threatening to quit following the ouster of leader Sam Altman and go to Microsoft. Even some of the board members that fired Sam Altman are now threatening to quit OpenAI and go to Microsoft. In the last hour, we heard from the CEO of a company that uses OpenAI about his thoughts on the whole debacle. Take a listen.
A big believer in Sam. The community's a big believer in Sam. I know him from back when I was in Y Combinator in 2012. But OpenAI, we just had Dev Day. I was there. It was the peak of their technology. Excitement was off the charts. It went really, really well. Now there's a little bit of a lot of mistrust on what's going to happen.
And for more on how we got to this point and where we could go next, we want to bring in Bloomberg's Rachel Metz, who's been doing some incredible reporting on this story. And Rachel, one of the things I so appreciated about what you've been uncovering was zeroing in on the why. You know, we were quickly charging ahead on the changes without fully knowing what was happening behind the scenes. I do wonder, though, after all these months of watching the OpenAI story play out, are we left with the fact that a once nonprofit that still had a nonprofit component that went for profit ultimately was a business that had some complications behind the scenes?
I think that the answer to that question is still a bit TBD, right? This is, as you pointed out, it's got a really complicated structure. When they changed over from being a nonprofit to being a capped profit company, they even have a chart on their website to try to explain it to people. And I, like probably a lot of people, spend a lot of time staring at that this weekend, trying to understand a little bit better, you know, what does that mean and how does it inform the structure of the company and all the control that this board has that sits at the very top of all of it.
How great is this for Satya Nadella, Rachel? I mean, initially he was apparently blindsided and livid about the firing of Sam Altman, but then the most important assets of OpenAI are now volunteering to just walk across the street and go work for him instead. I mean, I know they invested like $13 billion, but it's better than buying the company for $100, right?
It's pretty wild. I mean, I think that there are probably a bunch of regulatory issues that might come into play if that were actually to happen. If every single person who signed this letter were to say, okay, that's it, I'm going across the street to Microsoft. But it sends a huge signal. I mean, to put this into perspective, what we have learned as of just a few minutes ago is that the vast majority of the company has signed this letter saying we may leave if the board does not resign. Greg and Sam don't come back, and we don't get some lead independent directors in here. It's over 700 employees signing this letter. There's about 770-ish people at OpenAI at this point, so that's like 91 or 92% of the company saying we may leave if you don't do what we want.
And so with some of that reporting about the OpenAI staff threatening to leave, Rachel, what kind of board conversations happen next? I mean, I would have to think that having a conversation with Microsoft might have to be part of the equation for where we go next in this whole situation.
I think as with a lot of this situation, kind of like a shruggy emoji, you know, like we're gonna have to wait and see what happens here. I guess it sort of depends on what the board's aims are. The existing members of the board, if their aim is to really slow down the development of the kinds of technology that OpenAI has been so good at, then I don't know if they're going to want all these people to stay. I think it's going to sort of remain to be seen. But I will point out that Ilya Sutskever, who was one of the people from OpenAI that had been instrumental in the process to oust Sam Altman, he signed this letter. So I think that's like a bit of an interesting twist here. So we're just going to have to stay tuned and keep chatting with people and figuring out what's going to happen next.
Rachel, thanks very much. Rachel Metz there reporting nonstop from last week on this story that continues to pique our interest. Here in Manhattan, the final steel beam is up on JP Morgan's new state-of-the-art global headquarters. The CEO, Jamie Dimon, New York Governor Kathy Hochul, and New York City Mayor Eric Adams appeared at the 270 Park Avenue construction site to celebrate the new 1,300-foot building. We've been watching this go up for a long, long time, John. I'm guessing you saw it when you were in town last week. And it's, I think, a great sign for New York because they build it here and not in Miami.
And at a time when there's a lot of conversation around corporate real estate, and the architects behind that donut facility in Cupertino, California that Apple operates were behind this design as well, where there's equally a focus on green. But, you know, wellness is going to be a priority here. Yoga access and other things, and I think it's an interesting time to have. It's going to take a while, obviously, to get to the finish line, but by 2025, how many people are coming to the office and what are the factors that bring people into the office will also be an interesting part of this story.
Yeah, well, I mean, yoga access would be enough for me. That's why I come here every single day, John, to have access to yoga, which is very nearby. Coming up, another practitioner of yoga. We're going to speak with Hans Humes. He's a longtime Argentina bull, and he's going to talk to us about the election results last night. He owns the bonds, and we'll see how they reacted to a libertarian outsider coming in to run the country. He may dollarize the whole economy. At least that's what he said he's going to do. This is Bloomberg.
That's me, Max. What's up? How are you? I have been writing about Wall Street for almost 15 years. And what that means is I write about feuds and rage and rises and falls and comebacks. And every now and then, I also write about a couple of villains. Thank you so much. And now, I am about to do something new and very, very scary. We are making a show, and it's based on Bloomberg Businessweek magazine. So what is this show about? It's a show about money, power, culture, pop business. We're gonna ask complicated and profound people about their ideas, their careers, their lives, their risks, their failures, their imagination.
It's so incredibly liberating not to care what other people think.
I was giving my tools to other communities. I wanted to bring those tools home.
Tune in. Like, please, like, really actually tune in. I desperately need an audience.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
is going to keep rain World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacqua, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
This is Bloomberg Markets. I'm John Ehrlichman with Matt Miller. Time now for our Stock of the Hour segment. And we've been keeping an eye on shares of Argentina's state-run oil drill YPF, having their biggest intraday gain on record. It's one of many stocks tied to Argentina, moving higher after Javier Milei's election victory. The president-elect has pledged swift reforms to turn around the economy, including, in this case, privatizing YPF. And Matt, obviously taking an axe to inflation if he can tackle that, which is obviously a huge issue for the country right now.
Right? That's what both sides promised they would do. The question is, will they be able to, or will they make it worse? For more on the results from Argentina's presidential election, we're joined by Bloomberg Government Managing Editor Juan Pablo Spinetto. He's in Buenos Aires. Juan, what do we know?
So the latest is there are some talks between the Milei camp and the president, the outgoing president Alberto Fernandez, to have a meeting, and this is the first step in the transition. What people want to know is more details on what is going to be Milei's plan, particularly the question of dollarization. He promised this during the campaign. A lot of people voted for him because of that. But we know it's going to be technically very difficult to do this dollarization, at least if we consider it to completely ditch the Argentine peso and replace it for U.S. currency from day one. So more details on that, and crucially, who's going to be Milei's economy minister? That's what we're trying to find out here in Buenos Aires in the next few days.
All right, Juan Pablo, thanks so much for joining us. Bloomberg's Juan Pablo Spinetto in Buenos Aires, setting us up for my next interview. One investor not initially convinced by Milei is the chief executive and founding partner of Greylock Capital Management, Hans Humes. Before the election, the longtime Argentina bull had considered Sergio Massa to be the most pro-market candidate. Humes joins us now to discuss the results. So, Hans, thanks so much for coming in. What do you think?
The Argentine people have spoken. I thought that Massa represented some kind of continuity, that the risks of
continuity is what they didn't want.
Apparently. Well, exactly, 55% plus percent of the people. So, thank God for democracy. I mean, the wisdom of me versus the wisdom of the Argentine population, they spoke. So we're going to undertake a shock change. And I think it makes sense to sort of back up a little bit. And what does Argentina need? It needs confidence. More importantly than international market confidence, it needs confidence of the people. Why are we talking about dollarization? It's because nobody has confidence in the peso. So I think what's really important is that we see, as Juan Pablo was saying, really competent people being announced to the team. Because this is not like having a class where you're the professor. This is managing a big economy. And everything he does in the next little while is going to be seen in the eyes of what is going to give stability to Argentina. Whatever he does, if there's confidence, it's going to work.
Well, initially, I'm looking at ETFs and the U.S. traded stocks of Argentinian companies that just soared. Up double digits, 10, 20, 30%. When you look across the assets, what kind of reaction do you see?
Well, we focus on the external bonds, and they were up, 8, 9%, and then they sort of faded as more headlines started coming out about, boy, this guy's got a big job to do. And again, I think there's a lot of legs in an economic recovery because you can't get away from the fact that this is probably an all-time low in terms of confidence. And the next, the Milei government has a real opportunity to change the dynamic and instill confidence in the system. So we'll see.
And in terms of changing the system, this is somebody who's talked about cryptocurrencies. This is somebody who's talked about Bitcoin. Would you be surprised to see Bitcoin as legal tender in Argentina going forward?
Personally, I'd be a bit surprised. I think that is seen as somewhat aggressive. I mean, you saw that with Bukele in El Salvador, and I think the perception of that is a little bit more on the fringe than central. I think undertaking some kind of narrative on dollarization, I think what would be prudent. Shock dollarization, you're going to have the team. You have to look probably more to Ecuador than any of the other countries, Panama than dollarization, and I think that a sort of de facto dollarization rather than official dollarization might be a better path. So I'd be a little surprised if we see crypto as legal tender, but let's see.
And Hans, just in terms of fixed income, how are you going to be approaching this going forward? And what are you going to be looking for from the president-elect, who obviously doesn't take the traditional paths and became very popular on television as well, but having conversations, I would imagine, with people who are investing in a country's bonds is a different kind of conversation.
Yeah, and I think that the bonds are a pretty obvious signal to the market about confidence on the international side. Today was a bank holiday in Argentina, so we don't have real transparency on what their markets are going to think. If there's a lot of enthusiasm coming out of the blocks tomorrow morning, I think we're going to see a good backstop, and that's going to create a sort of a positive sort of cycle of confidence coming in, prices going up. But it's really going to be heading off some of the bigger amortizations coming next year, and if Malaysia puts out a competent team, engages in constructive dialogue with the IMF, I mean, everybody would be more than happy to see a good, solid base to a Argentina recovery. And I have to say, I mean, the winds should be in their sails on this. We've come off the back of the pandemic, the drought. There are a lot of sort of amorphous measures behind the scenes that point to some pretty solid performance by Argentina. So I think he just has to make the most of it and provide a sense of stability and, I don't know, predictability to the next step. So he's laid out a vision. Dollarization, the narrative around that might be the trickiest part of it. And then we'll see. I think that the markets are probably positioned in a way to be ready for a rally on the fixed income side. And if that works well, I think you get the positive impact of the improving prices.
Has he had a dialogue with bondholders? Has he had a dialogue with investors during the campaign? Or what do you expect him to do in terms of, paying back debt?
I think that consistent with his narrative, they're going to do everything they can to, service the debt. There has been communication between his team. There have been meetings here in New York and Connecticut. And I think that the messaging on that has been reasonable. It's a bit early now to say. I mean, the results came in less than 24 hours ago. Massa conceded, 6:12 p.m. our time, 6:13. So I think
6:13 p.m.
Not that I was paying any attention while I was at the Radio City Rockettes. So let's see what happens. I'd say tomorrow is going to be the day that we see the tone.
Okay. Good to have you, Hans. Thanks very much. Hans Hubes of Greylock Capital Management on the story of Argentina. Coming up, we'll get the view on retail sales as we head into the holiday shopping season. Stacey Widlitz of SW Retail Advisors joins us next. This is Bloomberg.
The younger generations are more, of course, pay more attention to sustainability, and so they are looking at brands that are greener. But you have to make sure you're authentic because they hate greenwashing. But what is very important to remember is that none of them, whether they're young or not, will ever sacrifice product quality and efficacy to sustainability, which is why part of the big transformation of our RNI, where there's this €1 billion we spend every year, most of it is spent on transforming our formulas from petrochemicals to biosourced ingredients and green sciences, but without losing the efficacy.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
Best question I get all night.
Bloomberg. Top experts. Great questions.
This is Bloomberg Markets. I'm John Ehrlichman with Matt Miller, and want to talk about the retail holiday season because people are going to be getting ready for that this week, certainly. We'll also get another batch of earnings in the sector tomorrow. Lowe's and Kohl's, Abercrombie & Fitch, Best Buy, all set to report their latest results and outlooks. Stacey Widlitz is president and chief international store hunter of SW Retail Advisors, and we appreciate having her joining us to talk about the retail sector right now. Set the stage for us, Stacey. What kind of holiday shopping period are you anticipating?
So far the retailers we've heard from, it's really been very specific, whether you're Walmart focused on grocery, right? Everybody's been benefiting from inflation. We know that consumers are spending on necessities, right? They're spending less on big ticket items. Home Depot talked about that. Williams-Sonoma talked about big ticket furniture under real pressure. Pottery Barn comps down double digits. So I think going into tomorrow to set the stage when we have, for example, Best Buy reporting, we're going to hear more of that, right? And it's no surprise. I think the good thing is that we know that inventories are very lean going into holiday because retailers and the wholesalers they sell to have been burnt with too much stuff. So they've corrected that mistake. So I think investors are largely giving these stocks a pass if their operating margins are okay, despite the fact that they're missing sales.
Stacey, I also consider myself somewhat of an international store hunter, and I'm looking for discounts. When you tell me inventories are lean, that worries me a little bit. Am I not going to be seeing a lot of discounting this holiday season?
Oh, you'll see it, and it's already started. It's pretty healthy out there, but I think the key is that for some of the promotions this year, it used to be 40% off everything. Now it's up to. So you got to dig a little deeper. You got to look a little harder for the discounts and the items you really want. I think also, there'll be a lot of these doorbuster situations as you've seen in the past where there's 20 limited quantities and you go in and you miss the boat. But I think in general, yes, because the inventories are lean, they won't have to give away as much stuff, perhaps, as we did last year.
And then, Stacey, we're talking about AI right now and the use of technology. I wonder, at what point do we shift away from just talking about Cyber Monday to talking about the digital takeover, if you will, of the retail holiday shopping season?
Yeah, and digital for so many of these retailers is half of their business already, right? It's apparel is about 40 to 50%. And increasingly shoppers are, they don't want to be in stores, right? Because we've heard about all the theft. You're also seeing retailers lock stuff up. So I have to wait 20 minutes to get a pair of socks unlocked at Target behind a plastic counter. So you're seeing a lot of people click and collect, buy online, pick up in store. They're coming in, getting same day from the parking lot, delivered to my car, and avoiding stores because it's just increasingly difficult. And unfortunately for some of these retailers and brands, that falls right into the hands of Amazon because click, collect, next day to your doorstep. You don't have to stand and wait for help and fight the stores.
Stacey, thanks so much for joining us. Great to get your take. Stacey Widlitz there. of SW Retail Advisors. John, we saw a 20-year auction at the top of the hour, which went well. And as a result, risk assets, which already were doing well in today's session, continued to rise. We see stocks up on the S&P 500 now 0.7%. Here you can see the 10-year yield coming down to 4.4160. The 20-year yield also coming down after that auction, which is usually a good sign. A weaker dollar and crude at $78.15. For John Ehrlichman, I'm Matt Miller. This is Bloomberg.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
Today's CFO has to be much, much more than a bookkeeper.
One of the most important things is looking around the corner.
We have to let go of the traditional legacy department store.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
You also have to be credible business leaders in order to really impact the business and steer the direction.
We are like biologists. We need to deeply understand the financial DNA of a company.
People just come with a playbook and say, okay, we're going to roll that. Don't do that. Think longer term.
It's an amazing time to be in this role. It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the chief future officers of some of the world's most influential companies. A new episode every month, only on Bloomberg.
This is Daybreak Europe. I'm Kriti Gupta. Let's get to the stories that set your agenda.
Taking you from the U.S. market's close.
A lot of this was priced into the U.S. session.
To the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Altman is out, Milei is in, and Bonds, they're just glad to still be at the party. Live from Studio 2 here at Bloomberg headquarters in New York, I'm Romaine Bostick.
And I'm Katie Greifeld. Kicking you off to closing bell here in the U.S. You take a look at where equity markets stand right now. They're continuing to rally. You have the S&P 500 up by about 0.7%. Big tech doing even better. The NASDAQ 100 up by about 1.1% at this moment. It probably helps that you're seeing, again, a little bit of a rally come into the bond market. You're taking a look at the 10-year yield, currently down by about 1-2 basis points. Again, we saw strong demand at that 20-year sale just about an hour ago, and you can see we are closing in on 440. And meanwhile, the VIX. We are below 14, Romain. The VIX currently at 13.72. Volatility draining out of this equity market.
Yeah, like a limbo concert here. How low can you go? But let's talk about the news flow and what everybody has been talking about here over the past 72 hours and is probably going to be talking about for the next few days. Artificial intelligence and the ouster of the man behind ChatGPT. It was supposed to be a blow to Microsoft, but now it's looking a little bit more like a coup. The shares had week in post-market trading on Friday, this after the news of Sam Altman getting the boot by OpenAI, of course, which was heavily bankrolled by Microsoft. But Mr. Softy shares have since staged a modest rally on news that CEO Satya Nadella is going to retain Sam Altman and potentially several other key employees from OpenAI. The AI news flow this week also going to pick up with AI chip darling NVIDIA due to report earnings after the bell on Tuesday. Meanwhile, down in Argentina, and its dubious distinction of orchestrating some of the worst experiments in national economic policy of any major country, is now headed deeper into uncharted waters. This weekend's presidential election victory by self-described anarcho-capitalist Javier Milei is drawing cheers from rank-and-file Argentines hungry for a new direction. To be sure, Milei's unorthodox proposals, which include abolishing the central bank and ditching the peso, have drawn some trepidation. But investors for now say things can't get much worse than they already are. The Global X MSCI Argentina ETF that trades here in the U.S. posting its biggest intraday advance on record. And back here in the U.S., the world's biggest bond market is trying to prolong what had been its strongest rally of the year. Katie, some steam being lost just a little bit here Monday as traders refocus on that Treasury supply.
A little bit of steam being lost, but you take a look at the U.S. 10-year yield over the past year or so. We aren't quite showing it, but if we did, you can see that after piercing through 5%, just kissing it, basically you've seen that big rally come back, and now we're looking at 4.4% on the 10-year yield. Of course, we're still up quite mightily over the past year, but as you can see, come down quite a bit. So some relief that means for the equity market. You go back to the majors, you think about what the S&P 500, the NASDAQ 100, the Russell 2000 is doing, and you can see just barely over there, we've strung together 3 straight weeks of gains for all of the major benchmarks. And so far today, building on that rally, Romain, really feels like an everything rally.
Yeah, absolutely. Here, taking a look at that rally and, of course, what it means and whether there are legs left. Samir Samana joining us right now, Senior Global Market Strategist over at the Wells Fargo Investment Institute, to help kick us off to the close here on this holiday shortened week. Samir, let's take a look at that rally here. We're starting off here a 4th straight week of gains potentially, and I guess a lot of key technical levels that have been tested, and at least for the moment, appear to have survived.
Yeah, I mean, it's pretty remarkable. I mean, on the S&P, we've traded below the 50 and the 200-day moving average, and subsequently recaptured it inside of really a week. And it's hard to believe that's the second time this year that we've done that. We did something very similar in March, and I think it just goes to show that as long as there's decent liquidity, which there is, as long as rates are still manageable, and especially if they're not going up and away, it seems like investors are willing to take a look at equities as kind of that long-term risk asset, because of kind of the growth prospects, especially for those largest names.
And there seems to be some support for that, Samir, when you look at the economic data that we've gotten over the last couple of weeks, combine that with some of the earnings that we've gotten, which at the bare minimum seems to suggest that there is some level of a floor there when it comes to the worst case scenario.
For now, yes, although we would argue that some of the recent data, which folks are taking to mean a soft landing, probably is something that does portend recession. So eventually, that softish landing will start to kind of become broader and deeper, at least to the downside on the economic side, and that will impact earnings, and it should also impact those multiples.
So that will impact earnings. It's going to impact corporate America. Take us from the equity market to how that translates into the corporate credit market when you're thinking about some of these riskier credits.
I mean, I'm shocked that high yield spreads are pretty much almost back down to 400 basis points yet again. When you look at defaults, when you look at kind of the Fed Senior Loan Officer Survey, all of those different things suggest basically the same thing to us, which is credit is tightening. The fact that investors are willing to lend to the riskiest credits, for 400 basis points on high yield, and you can argue around, 800 to 900 basis points on triple Cs, that to us says that, look, you probably want to be taking some profits here, especially in the year end when liquidity is plentiful.
And so that's the story in high yield. And of course, you take a look at high yield spreads right now under 400 basis points. But it's a little similar story when you take a look at investment grade as well. We're near 110 basis points. You bring that message to blue chip debt. Are you basically bothering with it, or is it just go into treasuries here and take out credit risk altogether?
Yeah, it really is the latter. I mean, at this point, you're just not getting enough of a pickup in yield to take the risk on the corporate or on the high yield side. Now, again, we would take corporates over high yield. But yeah, when you look at treasuries, when you look at agencies, when you look at mortgage backs, when you look at munis, when you think about what you can pick up with much less risk, to us, that's really where the value is right now in the fixed income markets.
So this gets to the broader question, though, I guess, about the embrace or the re-embrace, if you will, for some folks of risk assets. And even if you're talking about the fixed income space, are we actually seeing people really pulled off the sidelines, pulled out of the shorter tenors into something that's a little bit more long duration?
You know, long duration is still tricky, and I think you have to be very selective. I think when you're up close to 5% on the 10-year, like we were recently, there probably is some good value there. But, you mentioned the technicals earlier on the S&P, the technicals on the rate side, especially long-term rates, would still suggest some additional upside. So again, I think until we get kind of the all clear, until there's a good chance that we have put in the peak, I think you still have to treat, kind of long-term rates with a little bit of caution and a little bit of selectivity.
Samir, always great to talk to you. Samir Samana there, Senior Global Market Strategist over at the Wells Fargo Investment Institute, helping us kick off to the close here on the Monday afternoon, where we are keeping a close eye on OpenAI, where hundreds of OpenAI employees are threatening to resign and follow their ousted leader, Sam Altman, to Microsoft. We're going to take a look at what and how the turmoil at OpenAI could benefit Microsoft.
Plus, we'll speak with OpenTable CEO Debbie Su, her insight on the recovery of the restaurant sector and what to expect for the holiday season.
And the mixed martial arts company Professional Fighters League here, acquiring Bellator from Paramount in the largest acquisition in MMA history. Don Davis, Professional Fighters League founder, chairman, and co-owner, is going to be stopping by the program a little bit later. Stick with us. This is The Close on Bloomberg.
I think this will probably go down in history as one of, if not the largest financial crime ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in?
I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg. Context changes everything.
Let's get to the drama at OpenAI over the ouster of Sam Altman. Nearly all of the company's employees are threatening to quit and follow Altman to Microsoft unless the current board resigns. A letter signed by about 700 employees states that they are, quote, unable to work for or with people that lack competence, judgment, and care for our mission and employees. Joining us now is Bloomberg's Max Chafkin. And Max, before we get to what might happen, let's talk about what actually happened. Let's rewind to Friday. What do we know about why OpenAI ousted Sam Altman in the first place.
Yeah, well, what we saw on Friday, starting around noon Pacific time, was a head-spinning coup, kind of worthy of succession. The board of directors of OpenAI, which is a nonprofit, most people don't realize that because it's this fast-growing startup, basically, as we understand it, became concerned about Altman's sort of efforts to commercialize the technology. The thing that's hanging behind this is this concern about AI and the risks it might pose. Altman would often talk about that and kind of frame it as almost like an opportunity for OpenAI. Like their technology was so good it could bring on the end of the world. Turns out some of the people who actually had the power at OpenAI are worried about that, and that led to his ouster and then this kind of frantic race to try to get him back that we saw over the weekend, where you had investors, you had Microsoft, all these people that really don't want to just abandon ship or pull the plug or something on this, trying to get OpenAI to bring him back, and we're seeing that continue today with this latest news.
It'll be interesting to see how that plays off and whether they can really push back on the board on this. But when you hear about Microsoft basically pulling him in, as well as some other folks from there, the first question I had was, whose intellectual property is this? Because what can Sam Altman legally take with him that I would think would, in any other circumstance, belong to OpenAI?
So there are, like you said, there are potential intellectual property issues. That said, a lot of this stuff is open source. It's based on research that already exists. It would be possible to recreate it. In fact, we saw Elon Musk create his own sort of OpenAI-like thing just in a couple of months. So they could definitely make something kind of similar. I think the question is, number one, the brand. OpenAI, we're talking about it now. It's obviously there are huge issues. A lot of people are using it. A lot of people have decided that this is the way they want to experience a chatbot. That's something that Microsoft just can't take with it. And OpenAI also has relationships with lots and lots of companies. Sam Altman at this developer event said 2 million people, 92% of the Fortune 500. Some of those people could immediately leave, but they're not all going to leave and not all at once.
It's a great point. It's something we were talking about on Friday. There's a lot of companies out there that are building on OpenAI's tools. So let's talk about where OpenAI goes. They have a new CEO. They also have hundreds of employees threatening to quit. What's next for this company?
I mean, I don't know. I think what we're watching is still a negotiation that is ongoing. I mean, we have to see, number one, do employees make good on this offer? Number two, when do the lawsuits start flying? In these situations, like everybody just starts to sue everybody. That hasn't happened yet. It seems like they're still negotiating. That said, OpenAI has some resources here. I mean, they have this intellectual property, they have this brand, and they are at least making some signals that they're going to go forward. On the other hand, so much of this company was dependent on Microsoft, and it really seems like Microsoft was caught by surprise by this change in control, and it's hard to see how they're going to work productively without some kind of, change or compromise or something.
All right, Max Chafkin, Bloomberg Businessweek technology columnist, all over the big story of the day, really over the last few hours and quite frankly over the last few months. As we look ahead into next year, there are a lot of risk and a lot of opportunities out there. Let's get some insights out of Christina Hooper, Invesco Chief Global Market Strategist, fresh off the heels of Invesco's 2024 outlook. And of course, we'd be remiss, Christina, not starting off with AI. It was certainly the story of 2023, and based on the developments over the weekend, it's probably going to be the story of 2024. What is the investable opportunity there, if at all?
Well, interestingly, there have been so many stocks that have been viewed as AI plays, whether they benefit directly or indirectly, and I think that's going to continue. What investors are doing right now is they continue to be in a fact-finding mission, trying to understand which companies could benefit in terms of perhaps reducing staff, especially employee-heavy companies that could streamline call centers with the use of AI. So there are a lot of opportunities, a lot of beneficiaries, and I think it's still very much in the learning phase for investors.
As you know, I mean, investors are always sort of looking for that next big thing, whatever inflection point, pick your euphemism here. Outside of AI, are you seeing anything else like that presents an opportunity going forward?
Well, interestingly, I think the biggest opportunity right now is being driven by central banks, which is that we are very likely, I think definitively, we've seen the end of rate hike cycles by the major Western developed economies' central banks. And so that presents an opportunity. We know that historically, if we look at S&P 500 performance in the year after the end of rate hike cycles, not from the start of cuts, but from the end of rate hike cycles, what we see is in 5 out of this last 6 periods after the end of tightening cycles, double-digit gains for the S&P 500. So I see a lot of opportunity here. I think it's largely going to come from cyclicals and smaller caps as markets start to discount a recovery. But I also think tech is largely, is likely to benefit because rates are coming down, and as a long-duration asset class, they typically do benefit.
And we should point out too, I mean, if you believe that the hiking cycle ended over the summer here, I think we're getting close to double-digit gains already.
Yeah, there you go. And I mean, point taken that central banks and the end of the tightening cycle looms large in the market psyche. I do want to go back to that idea that, you've seen AI drive a lot of action in the stock market. You've also seen things like weight loss drugs, GLP-1s, drive a lot of action in the stock market this year. And in a way, it feels like thematic investing is coming back to the fore, that you have a subset of investors who are just looking to invest along a theme. I'm wondering if there's any sort of signal to take away from that sort of psychology change.
Well, I certainly think it's a good thing in terms of investor engagement, right? And I suspect that it will take money off the sidelines for those that are overweight cash as they get excited about themes. But I anticipate that going forward, what we're likely to see is a broadening of the stock market. So it's not just themes. It's about playing what is anticipated to be an economic recovery. And some themes, of course, can get overdone. The idea that planes are going to use less fuel because everyone's going to be so much thinner, I think that might be a stretch.
That was overkill?
Might be. I'm not 100% on that, but might be.
Yeah, well, we'll have to check in on that one specifically. But I'm going through your notes. I also noticed you have a section on alternatives here, on alternative investing. And this point in particular caught my eye. You write that we favor commercial real estate lending as a way to access real asset markets. Obviously, CRE, hotly debated asset class over the last several months. What do you see there?
Well, we see opportunity, right? Because prices have come down. Real estate is no different than bonds when rates go up. And so that in and of itself, that move away, when people are fearful, that can present an opportunity. And I think that, speaking broadly, that is to me a compelling place to start looking around as we head into 2024.
All right, Christina, it's always great to see you. Our thanks to Christina Hooper. She is Invesco Chief Global Market Strategist. And Romain, it's an interesting point, especially when it comes to tech, because, we think about tech and the common narrative was that this is a sector that's going to suffer when interest rates go higher. Obviously, we saw the exact opposite play out this year.
Yeah, well, for a corner of tech, because there were quite a few other names that really did suffer here. But it gets to this idea, too. Do you think we would have seen that same rally in some of those names if it hadn't been for some of those secondary stories like AI or even some of the growth stories when it came to enterprise spending that was sort of all the talk in the first half of the year? So I do wonder kind of how that all dovetailed and worked in favor of a lot of those tech companies this year.
It's a great question, and it's definitely been an interesting narrative to follow. It's going to be interesting to see if that follows in 2024 as well. But before we get there, coming up on this program, Argentina electing a new president, libertarian outsider Javier Milei, promising a radical makeover to Argentina's economy. More on that next. This is The Close on Bloomberg.
That's me, Max. What's up? How are you? I have been writing about Wall Street for almost 15 years. And what that means is I write about feuds and rage and rises and falls and comebacks. And every now and then, I also write about a couple of villains. Thank you so much. And now, I am about to do something new and very, very scary. We are making a show, and it's based on Bloomberg Businessweek magazine. So what is this show about? It's a show about money, power, culture, pop business. We're going to ask complicated and profound people about their ideas, their careers, their lives, their risks, their failures, their imagination.
It's so incredibly liberating not to care what other people think.
I was giving my tools to other communities. I wanted to bring those tools home.
Tune in. Please, really actually tune in. I desperately need an audience.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
A new day for Argentina. Javier Milei winning the presidential election in that country on Sunday, promising radical changes for the economy. Radical might actually be an understatement, but of course, some of the moves and changes that have been made by his predecessors have proven to be just as radical. The country's 143% inflation rate, a big part of the reason why he rode to victory. Milei now can act on his campaign pledges, which include swapping the peso for the U.S. dollar, shuttering the central bank, and making dramatic spending cuts. Adriana Dupito joining us right now, who covers the region for Bloomberg Economics, joining us right now. And Adriana, let's get right to it. Of course, he'll be sworn in next month here, and he's made it clear that he plans to hit the ground running here. What do you think he is going to do first? Are we going to be talking about the peso? We're going to be talking about the central bank or something else?
I think, good afternoon. I think that the first place to start should be doing the fiscal adjustment. The big problem here is that Argentina doesn't have a credible currency, among other reasons because the government has a very large fiscal deficit and funds it with monetary issuance. So if Milei wants to swap the currency for the dollar or lure investors back to the country or anything like that, the first thing that he needs to signal is that he is serious about making a sharp fiscal adjustment in the country. So the thing is that he has proposed a very aggressive fiscal adjustment during the campaign. He proposed to slash about 1/3 of all federal government expenditures. That is not doable. It is not politically sensible to do or even feasible. So the first thing that he needs to show is how he's going to make the fiscal adjustment, and going from there, he can start outlining a plan for dollarization if the time comes for doing that.
Well, let's talk a little bit more about dollarization, because as you point out in your research, I mean, the timeline and the process here are very important. We have very little clarity around that. What are you expecting?
Well, I expect that over the coming days, he provides some sort of detail on how this thing is going to be carried out. During his victory speech, I found it very interesting that he didn't utter the word dollarization, and he didn't say that he was going to shut down the central bank like he claimed that he would do during the campaign. Instead, he said that he's going to fix the central bank's problems. So perhaps this is some toning down of his proposal, which I think would be a good idea because, number one, to dollarize, you need the dollars. Argentina doesn't have the dollar. Net international reserves are now negative in $10.5 billion, according to my estimate.
Yeah.
So he needs a money that he can't get out of nothing.
Well, why? A lot of his policies, Adriana, have been sort of put out there as new, as novel, as bold, as radical. I've seen a lot of these policies from his predecessors, definitely dollarization and the peg to the dollar here. Why is this time going to be different?
I don't think it will necessarily be different. If they want to make it different, they need to be serious about doing the fiscal adjustment on a sound basis. One of the ideas of Milei's team is that by shutting down the central bank, they kind of make it impossible for the government to run deficits and have them financed by monetary issuance. In this sense, what they want to prevent, and this is how they want to make it sound different this time with Argentina, is that they don't want it to happen with Argentina what happened with Ecuador, where the central bank, there was a dollarization, but the central bank still managed to find a way to finance the government's deficit. So in a way, this is what they claim that could be different.
Is he going to have the support, though, Adriana? I mean, he can do all those things and say all those things, but he still has a legislature that he needs on his side.
Yes, and he doesn't have that kind of support in Congress. Milei's La Libertad Avanza elected about 38 representatives in a lower house that is comprised of 257 seats and only 7 senators out of 72. he could count on the support of part of the Juntos por el Cambio coalition that is led by the former president Mauricio Macri, who probably will play some role in his administration. But even that doesn't seem sufficient. And he cannot do things by decree, as he suggested in the past, or do it by just having referendums. So the first challenge for one of the first challenges for Milei is to find a way to work with the traditional politicians that he so much despises.
Yeah, well, that's going to be tough. All right, well, it's going to be an interesting experiment. And of course, as I'm sure you know, Adriana, the whole world is watching. Adriana Dupito over at Bloomberg Economics covering the Argentina economy for us. And Katie Greifeld, we talk about the idea that he just does not have that congressional support. I was just looking at the numbers. His party has 38 of the 257 lower house seats and just 7 of the 72 seats in the Senate. So basically, we're talking 10%.
Not a lot of political capital to work with. And of course, it's hard to get a market reaction here because local markets are closed. You do have the ETF trading, as you mentioned. ARGT currently up about 12%, trading volume about 25 times the average. So it's interesting to watch that play out.
All right, a lot going on abroad and, of course, back here in the U.S. Stick with us. This is The Close on Bloomberg.
The younger generations are more, of course, pay more attention to sustainability, and so they are looking at brands that are greener. But you have to make sure you're authentic because they hate greenwashing. But what is very important to remember is that none of them, whether they're young or not, will ever sacrifice product quality and efficacy to sustainability, which is why part of the big transformation of our R&I, where there's this €1 billion we spend every year, most of it is spent on transforming our formulas from petrochemicals to biosourced ingredients and green sciences, but without losing the efficacy.
Wall Street is waking up. Europe is already trading. And Manus Cranny and Danny Berger are making sure you have the news, data, and analysis you need to set your agenda. Micro, macro, and everything in between. Manus in New York and Danny in London follow the money around the globe. Take a daily deep dive into risk and help you make informed decisions for your trading day. Watch Bloomberg Brief, weekdays at 5 a.m. Eastern, only on Bloomberg. Context changes everything.
Was going to keep winning World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
This is the countdown to the close, just about 2:30 here in New York. Equities right now here in the U.S. setting up for what could potentially be a fourth straight week of gains. Meanwhile, crude oil right now trying to avoid a fifth straight week of losses. Abigail Doolittle is standing by right now with our commodities close. Abigail.
And the week may be young, Romaine, but crude oil doing a pretty good job, at least on this Monday, up 2.1%. This is Traders' Eye, the upcoming OPEC Plus meeting, and the idea that perhaps the cartel will in fact support the prices of oil, maybe cut production or something along those lines, so that we will not see oil do technically what it's been doing, which is sliding quite significantly, but not today, down up to 1.1%. Heating oil futures also up for a second day in a row, up 2.9%, perhaps as some of the cold weather comes here into the U.S. Copper up 1.7%. It's at a 10-week high, and some are saying that industrial metals, the recent rally has to do with traders betting that the Fed is done hiking, and that this provides support for the economy. So copper again up 1.7%. Soybeans, not entirely sure what's behind this, Romaine, but soybeans are also up for a second day in a row, up 2%. Overall, it's worth noting that Bloomberg Dollar Index down about 0.4%, giving the overall commodity complex a bit of a bid.
Yeah, a lot of green on the screen in the commodity space as well as in the equity space as well. Thanksgiving week here in the United States, which of course kicks off the holiday shopping season, but it's also a pretty busy time for eating out as well. Going by the number of reservations booked through the Open Table platform, dining, though, has been relatively flat in 2023. The numbers also show that solo dining is on the rise, while the most popular days to dine out, Thursday and Friday. Let's get some insights into some of these details with Debbie Su, the CEO of Open Table, joining us now. And Debbie, great to have you here on the program. Always fun to talk to you about dining trends. Let's first start off here with some of the comparisons, because I know over the past year or so, we've kind of compared current dining conditions with pre-pandemic conditions. We're now starting to take a look more at the year-to-year numbers, say from 2023 back to 2022. And based on your own data, it says things are basically unchanged.
That's right. We're seeing dining demand remain relatively flat year over year from 22 to 23. And I actually think that's incredible if you think about all of the macroeconomic uncertainty that we've seen this year, as you yourself have been reporting on. I think it's a win that restaurants are coming out relatively flat year over year, and it's a testament to how important restaurants are to all of us. So I think it's actually good. I wish it were higher, but we're seeing some really bullish signs for the holiday season that's coming up in December. Valentine's Day and Mother's Day were really high up year over year. We're expecting to see the same for the holidays in December.
Is this traditionally a time where we do see an uptick in people going out to restaurants? I know we kind of think of the holidays, at least here in the U.S., as kind of that time where we all spend with each other at home. But I don't know, depending on your family, sometimes it's a little bit better to go out.
People are definitely going out. And Romaine, you mentioned before the segment started that you're hosting this year, and maybe you want to save yourself some work and host at a restaurant. This is typically a very busy time for restaurants. Lots of restaurants do Thanksgiving meals. They host Thanksgiving meals, all of the year-end holiday parties leading up into right up to the first of the year, actually. We're expecting a big increase from a year-over-year standpoint. Restaurants' books are getting booked up, so if you haven't made your reservation, I would definitely go do that. But this is a big dining moment in the year.
So people are going out, and outside of just the holidays, as Romaine mentioned, people are going out alone. Talk to us about what we're seeing in solo dining, because I have to admit I was a little bit surprised to see that uptick there.
Yes, so solo dining has been up 4% year over year. It's the party size that has increased the most actually this year. And I think the reason we're seeing that is because there's been renewed focus on self-care, of dating yourself. I myself am based in San Francisco, and this Wednesday I happen to have a free block open, for lunch. I walked to Neiman Marcus and dined by myself at the Rotunda, and it was glorious. So I'm not terribly surprised to see this stat. I think more and more people are happy dining alone.
Well, Debbie, I commend you, because I could not be alone with my own thoughts for an hour or so. But also in your research, there's this trend, too, of an increased awareness and increased popularity when it comes to mocktails. I mean, just speaking anecdotally, this is something that I've seen on social media among my own friend group, that people are often opting for non-alcoholic beverages. And it's interesting that it's showing up in your data as well.
That's right, and it's global. We're seeing this as a global trend. Diners, as they write reviews for restaurants, are mentioning mocktails at a rapid clip, much more so than we've seen during other periods. And I think you have a dry January, and people are sober curious and being, dare I say, more health conscious. So yeah, we are seeing a rise in mocktails, and people are all about them. So instead of having a beer or a wine before your course comes, we're seeing actually a lot of people order that non-alcoholic beverage. That's very tasty.
Did you just use the phrase sober curious?
I did.
That's a new one to me.
I hear that's a thing.
I like it. I've never heard that before.
Sober curious people are still ordering espresso martinis, though. Debbie, it's always so fun to talk to you. Really appreciate you stopping by. That is Open Table's CEO, Debbie Su. Now, still ahead, more
coverage. Are you sober curious? Or
I wouldn't identify as sober curious,
yeah,
I gotta
drunk
say.
Curious.
In any case, more coverage of the ongoing drama between Sam Altman, OpenAI, and Microsoft, and of course, what this means for the tech giant next. This is The Close on Bloomberg.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
Today's CFO has to be much, much more than a bookkeeper.
One of the most important things is looking around the corner.
We have to let go of the traditional legacy department store.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
You also have to be credible business leaders in order to really impact the business and steer the direction.
We are like biologists. We need to deeply understand the financial DNA of a company.
People just come with a playbook and say, okay, we're going to roll that. Don't do that. Think longer term.
It's an amazing time to be in this role. It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the chief future officers of some of the world's most influential companies. A new episode every month, only on Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Let's get a view from the sell side with our top calls, the big movers on the back of analyst recommendations, and we start off with Penn Entertainment. Bank of America upgrading the sports and gaming company to buy from neutral, with the analyst saying Penn is getting good looks from the partnership it launched last week with ESPN Bet. So far, initial downloads and user activity on the app have been much stronger than expected. The shares stronger than expected as well, 7% gain on the day. Next up, KB Home, downgraded to neutral over at Wedbush, with the analyst saying the home builder is up against the ropes in a more competitive environment. Price target remains at 55 because the analyst doesn't see any catalyst for an increase or a decrease. Shares down about 1% on the day. And finally, let's take a look at Chegg, an underweight rating over at Morgan Stanley, taking it down from equal weight, with the analyst saying weaker trends from web traffic and app downloads has created an unattractive risk profile. In his view, Chegg is also still struggling to address challenges from generative AI competition. Those shares down 7% on the day, and those are some of our top calls. We want to stick with AI, artificial intelligence, and talk a little bit more about what happened over the weekend, and it is a lot. Microsoft and OpenAI are grappling with the leadership changes at the AI startup. Former CEO Sam Altman and the co-founder ousted from the company and then later asked to join Microsoft to help lead that company's own AI efforts. Greg Moskowitz joining us right now. He has a buy rating on the shares of Microsoft to talk a little bit more, I guess, as to whether this actually works a little bit more favorable to Microsoft by having Sam Altman and, more importantly, some of those executives and staff under its own umbrella rather than an investment in a separate company, Greg.
For having me. It's great to be here. And I should preface this by saying that this is fluid and nothing has been finalized yet. But this has been a tumultuous turn of events over the past 3 days. In fact, we've never seen anything quite like this before. Now, what was spoken about earlier today, of course, and Satya Nadella, Microsoft CEO, tweeted this, that Sam Altman and Greg Brockman, the CEO and president respectively, and Sam, of course, has very strong worldwide recognition in terms of being at the very forefront of AI, and Greg Brockman is a key executive as well, that they would be joining Microsoft and leaving OpenAI. What has happened since then is just a flood of reports and additional speculation, and in fact an open letter that has come from 500 plus of OpenAI's 700 employees asking the board to step down and to reinstate Sam Altman and Greg Brockman. And so that's why I say this is not entirely finalized. Now, should they go over to Microsoft, in our view, without question, this would be effectively a coup for Microsoft. You would see a company that would be obtaining the key executives and potentially many talented and highly desirable engineers of the preeminently privately held Gen AI company without actually having to acquire that company.
So, Greg, just let's pause for 1 second. Sam Altman right now is posting on social media, on the social media platform X, saying that Satya, referring to Satya Nadella, of course, CEO of Microsoft, and my top priority remains to ensure OpenAI continues to thrive, and says he's committed to fully providing continuity of operations to our partners and customers, and that the OpenAI Microsoft partnership makes this very doable. I'm going to spin this back to the benefit to Microsoft. Looking at that share rally that we saw this year, the bulk of it coming after the announcement of its investment in API and the new ChatGPT tools here. How important is this partnership to Microsoft's current valuation?
It's very important. And if you look at Azure, which is the most critical part of Microsoft's business, the most important KPI that they report upon every quarterly earnings, they are currently getting 3 points of Azure revenue growth from AI services, and most significantly, we believe that includes the Azure OpenAI service. And so it has been incredibly critical, to your point, Romain, not just in terms of starting to really affect the financials in a positive way, but also the valuation multiple and the perception of Microsoft as a company that is going to get stronger and stronger. And so, yes, it is absolutely an important partnership. Having said that, if this does change form in the sense of acquiring the top talent from that company and not having to do this indirectly by virtue of an investment, which is what currently stands in OpenAI, there is a possibility that Microsoft benefits even more directly. But again, we will have to see how this ends up, because we don't know for certain that what has been being talked about currently is the way that it'll wrap up. And the last reports that we've seen is that Sam Altman has not ruled out a return to OpenAI. And so again, a lot of twists and turns. Very unprecedented story.
Well, Greg, at what point does OpenAI become a risk potentially for Microsoft? You think about how significant that investment is, how much money that they've put into OpenAI. I mean, this is a company where who's running it right now? We know there's a lot of questions over the future of this company, whether they are going to see an exodus of employees, and you think about how much Microsoft has in it. How are you thinking through that risk?
Well, as recently as a month ago, OpenAI was being talked about as having an $80 billion valuation. Now, obviously, things are in flux as we speak, but this is still a company that has created very valuable IP be, and that, to your point, has had a very strong relationship with Microsoft. Now, Microsoft has said earlier today that they will continue to maintain a strong partnership with OpenAI, but clearly, exactly what form that takes is uncertain at this time, and so we do have to see how all of this plays out. We do think, though, Microsoft, by virtue of their strong partnership, and again, we'll see what happens with key executives and perhaps some other very senior researchers at OpenAI, but we clearly think that they are in a strong position really under either of these outcomes. I am not concerned that Microsoft could lose any thought leadership as it relates to AI or see any real slowdown in momentum. We think that, again, if anything, they can end up getting stronger as a result of this, but we'll have to see again how this will all turn out.
All right, Greg Moskowitz over at Mizuho. A closer look at Microsoft. Remember, it was back in January where we first learned about that investment in OpenAI, and of course, they rolled out those ChatGPT tools just a month or so later. All right, coming up here on the program, we're going to be joined by Deborah Lair, Edelman CEO, to discuss her takeaways from APEC. That conversation coming up here on The Close. This is Bloomberg.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in?
I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that shortly.
Don't miss Bloomberg's interview with the This is Bloomberg.
Welcome back to The Close. It's time now for our Wall Street Week Daily segment. The host of Wall Street Week, David Weston, joins us as he does every day at this time. David, coming off the heels of that APEC summit, which I think actually proved a lot of people wrong, because I think a lot of people thought, oh, nothing's going to come out of this. But just the fact that you had the two world leaders of the two biggest economies actually face-to-face talking, that in and of itself had to be an accomplishment.
Yeah, it certainly is better to talk than not to talk, right? Which is what we've been doing in the past. So we're all, as investors, we're trying to figure out what this all means for us down the road. And to give us an answer to that question, we turn now to Deborah Lair. She's Edelman Global Advisory CEO, as well as Vice Chairman and Executive Director at the Paulson Institute. Deborah, great to have you back with us. So what did get accomplished in this meeting between President Biden and President Xi last week?
Well, I think it met expectations, and expectations were fairly low. Out of the summit, they were able to reach agreement on military-to-military communications. Again, while that may sound like a small accomplishment, it's critically important in case of some kind of accident. They agreed to work together to fight against the import of fentanyl into the United States, which is a scourge that's crossing our country. But also what President Xi was trying to do on this visit was to reassure the U.S. business community and the global business community, quite honestly, that China is addressing the economic challenges that they have, that China's still open for business, and that they're still welcoming of foreign firms in China.
Yeah, that certainly was a priority for President Xi, because quite apart from the meeting with President Biden, he had that meeting with the CEOs, and he seemed to be trying to deliver a message, basically, we're open for business, come back and investment, which he needs to do given where foreign direct investment is gone. I guess my question is, how will investors know whether this is a real change in policy or rather just the message has changed?
Well, I think it's always like President Reagan said, trust but verify. A large part of it will be the actions that China takes to reassure the business community, including continuing to open markets. Today, regulatory risk is one of the biggest challenges. Foreign firms are never quite sure what new regulations are going to be coming out of the Chinese government, or in some cases even the U.S. government, and how they're going to have to react to it, or how, like in the case of China's national security law, it's going to be interpreted. And in many cases, it's really a question of confidence. Does the U.S. business community have confidence in the direction that China is going to take, that they're going to take the difficult steps to reinvigorate the Chinese economy? Can they reassure Chinese consumers to start to spend, which will also help with the economy? And as I was saying, will they continue to reassure the U.S. business community that they're willing to not only open the market, but continue to assure that it's a level playing field for them in China?
Well, that brings me to my question, Deborah, particularly when you look at actual investors, not just the businesses on the ground, but those foreign investors looking to invest in China who effectively have kind of been on strike for the last year or so. And I am curious as to how much of that is more tied to economic conditions, or is it more tied to the political and geopolitical conditions?
Well, it's an excellent question, and certainly it's a combination of both. The U.S.-China tensions create the atmosphere, particularly when you have Capitol Hill, who's looking very carefully at private equity and venture capital and the investments and what that money is going towards. Is it being used to support military innovativeness in China, and can that be used against us? The new outbound investment regulations are supposed to address that, but also that doesn't explain 6 quarters of outflows of capital, $160 billion, when China used to be just 2 years ago the largest destination for direct foreign investment. So it's certainly confidence in the Chinese economy itself, where it's going, and the ability of investors to continue to benefit from that.
Given China's size and, more importantly, its influence in the world, Deborah, there's been, of course, a lot of criticism that Xi Jinping hasn't taken a little bit more of a public stance on some of the geopolitical conflicts out there. That includes the war in Ukraine. But we are learning that he is hosting Arab leaders and Islamic leaders in an effort, I guess, to provide some sort of solution to what's going on with Israel and Hamas?
That's right. You know, China is actually the largest trading partner to 75% of the world, a position that the U.S. held just 20 years ago. And naturally, its foreign policy is going to follow those economic interests. The Middle East is increasingly one of its most important trading partners, and it is the largest trading partner to most of those countries. So we've seen an increase in China's willingness to step in to try and resolve some of the conflicts. Just recently, they helped broker a détente between Iran and Saudi Arabia. They have been vocal, quite honestly, in support of the Palestinians and Gaza. They had actually planned to invite Prime Minister Netanyahu to China in October. Clearly, that visit is indefinitely put on hold, but they have been trying to find a way to play a role to broker some kind of arrangement. And today they're hosting a 2-day meeting with Arab and Islamic leaders, as you said, to try and move towards some kind of peaceful solution.
Deborah, you referred to the need for President Xi to restore some confidence in the international community. Is his bigger challenge when it comes to confidence with the international investing community or back home to get his domestic economy going? Because part of the concern is that people are sitting on their savings rather than spending them because of the uncertainty about the regime.
Absolutely. I think that the two go very closely together. Confidence is a big issue in China. People have to feel confident that the healthcare system is going to support them. They have to feel confident that their children are going to get jobs, particularly when unofficial unemployment rates for the youth could run as high as 40%, it said. So these are all concerns that the Chinese people have about the economy, and which is why in many cases they're sitting on their money. Where are they going to put their investments when they can't invest in real estate? And that goes hand in hand with how the foreign community are looking at the opportunities there. At the same time, as you look at where to put your money and the investment opportunities, it's appealing when a lot of the Western democracies, for example, their interest rates are going up. Can you get a better return there than the somewhat sluggish growth that you're seeing today in China?
Deborah, it's always great to have you with us. It's Deborah Lair. She's Edelman Global Advisory CEO, as well as Vice Chairman and Executive Director of the Paulson Institute. And Romaine, tomorrow we're going to go back to the subject you've been talking about, which is what's going on with OpenAI. We're going to talk with Eric Gordon, Assistant Professor at the Ross School of Business at the University of Michigan, about the issues about corporate governance that we're seeing there.
Corporate governance.
A couple, yeah.
That could be a long discussion here. I'll be sure to tune into that. And of course, you can check out David Weston every day around this time for our Wall Street Week daily segment. And Wall Street Week airs every Friday at 6 p.m. Wall Street time. Stick with us here on The Close as we round out into the final hour of trading here on this Monday afternoon. A holiday-shortened week, so expect volumes to be light, but a continuation of the rally that we started basically about 2.5 weeks ago. The S&P 500, the Dow, and the NASDAQ right now at session highs. This is Bloomberg.
We have been so used to the fact that every time there's a problem, central banks come and ease. This has been the kind of playbook, throughout my career, before that, after I left. Now we're in a very different environment. Central banks actually have to create a recession, in essence, to get back to price stability. So it's a complete reversal of the modus operandi, in a sense, of central banks as they've known it for the last several decades. So that's why it's not so much that they're getting something wrong. They've now acknowledged that there is this trade-off, these costs to pay, but it's a completely different way of thinking about central banks, and it's a different role. Another way to put it is they have to be unpopular now in order to get inflation back down, where it used to be you could count on them each time to rescue you, to stabilize the system, to bring support. And that has shifted, and I think many people, even in the markets, have not quite understood in my mind how much we are now in a different regime compared to the last 4 decades, effectively.
So it's what, almost an easing bias in the markets? How would you describe it?
In the U.S., yes. And I think it's this idea, this almost pre-programmed idea, when there is a problem, i.e. potential recession, central banks will come and ease.
DOJ or other authorities
could face bigger challenges next.
It was going to keep rain World Cup. This is a three.
As the economic picture
Covering the intersections of Hollywood, Silicon Valley, and beyond.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Just about 3 p.m. here in New York. This is the countdown to the close. Let's get a view from the top. I'm Romaine Bostick.
And I'm Katie Greifeld.
Stocks right now, right around session recession highs, Katie, here. I mean, there are a lot of doubters coming out of the last 3 weeks of gains that we saw in this market. A lot of doubters saying that, look, this is it. This is a technical-driven rally. It's sort of run its course here. And well, I guess at least for one more day, it hasn't quite run its course.
I love when people point to technicals and say, you know, this is a reason why it's unsustainable. I mean, even technical or not, we're looking at 3 straight weeks of gains, and we'll see how this week shapes out. As we know, it's a holiday-shortened week.
It is a holiday-shortened week, and as you know, I'm sure, typically that Friday after Thanksgiving, one of the lowest volume days. So most of the price action that you're going to get this week, take it with a bit of a grain of salt. We'll keep an eye, of course, on Argentine markets right now closed because of a bank holiday here. We should point out their benchmark index did rally prior to the election, and right now the ETFs here in the U.S. also rallying here about 13%. I wanted to point this out, and I thought this was interesting here. The folks over at Bloomberg Automation were crunching the numbers on factors to watch. Normally we do this with Chris Kane here, and I thought it was interesting here. It was basically the dividend story is really starting to play out, and we've heard this from a lot of gains, Katie, that's saying that basically cash, and in this case dividends, is basically where a lot of folks have really sort of pushed people into in terms of wealth advisory as well as portfolio management here. And the rolling 1-month return right now really outpacing almost everything out there. Dividends and quality at the top of that list. And while the bottom of that list is low vol and size.
Yeah, and it's interesting. I mean, size has been the winner year to date, but a little bit of a trend shift in the past month. Quality, I feel like we've been talking about that all year, been hearing that all year, and it's showing up in the 1-month figures as well. Let's talk about some of these specific stocks.
Okay.
I'm going to start with Microsoft. I don't think I need to tell you the story. Again, obviously a little bit of a coup going on over at OpenAI. Microsoft taking on Sam Altman, Greg Brockman. Now you have near total mutiny at OpenAI with remaining staff threatening to jump to Microsoft. That's all to Microsoft's benefit, up 2.3%.
And I think I asked you this earlier about like the idea is that if you hadn't had OpenAI and all that, would you see the valuations? And I was looking at it, 57% gain on Microsoft this year. Almost all of that has come since it announced its investment in OpenAI.
It's pretty amazing, and it's not just Microsoft. When you think about the conversation that OpenAI started and what that's meant for other companies as well. But let's move on here and let's talk about Bristol Myers Squibb. Not having a great day. Got some bad news out of Germany, actually. You had Bayer halt a trial for its experimental cardiovascular drug due to a lack of efficacy. Now, Bristol Myers has a very similar experimental drug in works as well, so that's sending shares down by almost 4%. I just wanted to end on CleanSpark just for something fun. This is actually a Bitcoin miner. Haven't talked about one of those in a long time.
I didn't know they still existed.
They do. Yeah. This one's up 16%. That is because Cantor came out reiterating its overweight on CleanSpark. So there you go. Shares up over 15%.
And of course, Bitcoin having a pretty good day, back above 37,000 as we are 1 hour away from those closing bells. Our cross-platform coverage starts right now.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. Romaine Bostick alongside Katie Greifeld. We're joined right now by our colleagues Carol Massar and Tim Stenovic. Welcome in full to our audiences across all of our Bloomberg platforms, television, radio originals, and our partnership with YouTube. Happy Monday, Carol Massar.
Happy Monday.
Unfortunately, I was taking a look at kind of, I guess, the economic tea leaves, if you will, a read on the consumer, a read on the household. And there's some interesting stories here that I guess cause a little bit of concern about just how healthy household balance sheets really are.
Yeah, absolutely, right? It's a good question, right? Can Americans, can they keep on spending essentially, right? Which is so key to the U.S. economy. Well, having said that, Americans are increasingly tapping their retirement accounts, and they're doing it for a couple of specific reasons. Tim may touch on that in just a moment, but here's the numbers. In the third quarter, 2.8% of 401k retirement account participants took a loan against their account. Maybe it sounds like a little bit, but it's up from 2.4% in the third quarter of 2022. This is coming from Fidelity. 2.3% of workers took a hardship withdrawal last quarter. That is up from 1.8% a year earlier.
So the concerning element here is the top 2 reasons that were given for the uptick. One was to avoid foreclosure for homeowners or eviction for renters. The other one, guys, to pay for medical expenses.
Yeah, you don't like to hear that. But I mean, this is kind of the reality of America.
Yeah.
And we always talk about just how precipitous the consumer and the households are, right? The idea that there are so many people that are really just one paycheck away from ruin, whether it's because of medical costs or losing their jobs or something like that. Just a sobering reminder here that that big pillar of our economy isn't necessarily as stable as we like it to be.
Exactly.
Or perhaps olive oil, not to transition just very bluntly here, but another story that was top of mind, you think, slick, that's cute. Top of mind, especially as we head into the holidays, great story on the terminal talking about the surging cost of olive oil is actually making it more expensive, specifically to make Spanish paella. Apparently, this is a monthly index that we have at Bloomberg.
Did you find out about this today as well?
I did.
Okay,
yeah.
I thought, okay, good. I thought I was the only one who didn't know we had an index that just
We
covered
have an
Spanish
index for
paella.
everything, guys.
It's pretty cool.
We do. And it now, it costs 20% more to make that paella. And the reason why is because you take a look at the price of olive oil specifically, the pace of growth in the price of olive oil has accelerated to 73.5%. That was happening last month in Spain, and also about 49% when you take a look at Italy. So, I mean, we talk about surging costs. Of course, this falls into the category of food that the Fed would look through. But, I mean, consumers are still feeling the pinch, and it's not just a U.S. story, obviously. This
Remember
is very
earlier
global.
this year, we were talking about Starbucks was putting olive oil in the coffee or something. Remember that?
Yeah.
Did that just go away?
Tried to blank that out.
Yeah. I don't know.
I think what's interesting too is it's just a reminder inflation hasn't completely gone away, right? And I feel like we constantly get that reminder, certainly from Jay Powell of the U.S. Central Bank. But I also think about, we have we just had a coffee guest on, we have a lot of wine guests, and constantly they talk about when it comes to growing anything, that whether it's climate change, these are things that are impacting how they're able to do things or not do things. And in many ways, it drives up the costs.
Did you guys know that we have a lot of wine guests?
We did,
Okay.
but I will point out one silver. I mean, not to minimize what you're saying, because I know it's important. But one interesting thing, and I know you cover wine a lot, is that it's actually opened up a lot of regions now to be able to grow and experiment with things. And you've got some great wines coming out of some regions that typically you wouldn't have. So there's your silver lining there.
Well, one thing that I found interesting about these indexes,
what are you, sober curious? What was the word?
We were talking about that earlier.
Sober curious?
Yeah, we had a guest on earlier, the CEO of Open Table. She used that word that some people, when they go to restaurants, they're sober curious, meaning they're ordering the non-alcoholic cocktails and eating alone, which I don't know.
This one over here to my right.
Eat alone and sober curious.
That's you.
Both
That's
of those
Tim.
things.
Tim, really?
But that's whatever.
Hey, what's Tim, like hiding from his family or something? What's happening?
They're away right now, so I get to do whatever I want. Hey, I do want to say one more thing about the indices that we have here at Bloomberg that cover so many different things. The one that covers margarita pizza includes the cost of electricity in Italy, and that went down, what is that, a whopping 47.5%. So we talked so much in the last couple of years about increasing energy costs in a lot of Europe. Important to keep an eye on that one. It's not just the cost of raw goods that go into sort of making these dishes that people have to pay for. The other inputs, of course, include energy, and if those prices are coming down, that could be a good thing.
It's an offset. Does that offset olive oil? I don't know.
Net, I'm hungry and I'd like a glass of wine. That's what I'm going to say.
It's only Monday,
guys,
and it's 3 o'clock.
It's only Monday.
It's a holiday week.
All right, guys, we're going to be back in less than an hour's time. Our cross-platform continues: radio, TV, YouTube, and of course, Bloomberg Originals. Join us for Beyond the Bell at 4 p.m. Wall Street time.
And we continue our coverage right here on The Close, counting you down to those bells. Just a little more than 50 minutes until we get there. Two of Wall Street's top strategists are divided when it comes to corporate America's earnings outlook for next year. Strategists out of Citi expect profits to hold up even if the economy does slip into a recession. Meanwhile, JP Morgan's team thinks diminishing pricing power would crimp overall revenue and margins regardless of whether growth contracts. Joining us with her perspective, Cameron Dawson, Chief Investment Officer over at New Edge Wealth. All right, Cameron, let's get to it. I mean, the earnings season is effectively done, at least all the big names that are out there. I mean, it wasn't that bad. I mean, did you find anything encouraging here about the trend going forward that maybe we can expect, maybe we can sort of bank, maybe we can invest on the idea here that profit recession is behind us?
The most encouraging thing that came out of earnings season was that companies were able to find a way to find upside in margins, which just meant that the revenues weren't the source of the upside surprise. It was actually the blocking and tackling on the cost side of things in order to drive upside. Now, we would agree with JP Morgan that pricing power has been a really important component of expanding margins over the last couple of years. When companies can raise prices, that increase in prices falls right down to the bottom line. and really does allow for very beneficial margin expansion. So as inflation fades, pricing power fades, what happens to that margin that benefited from inflation? So really then what we're looking for is a continuation of that trend where companies can find different ways in order to drive margins higher, not just by raising prices, and if that can continue into 2024, because the important point is that if you look at underneath the surface of consensus, consensus has margins going back up nearly to their 2021 peak, which is a pretty high bar to surprise the upside going into next year.
That gets into some of the broader macro questions as well, Cameron, about inflation, whether it's really been tamed. We were just having a conversation with our radio colleagues about the high price of olive oil, and I know that's just one minor input in a broad array of goods here, but they are material things to a lot of businesses here, and I'm wondering if this is about managing that on the cost side, or can they count on further deceleration, disinflation in that space?
Yeah, there has been beneficial disinflation really for quite some time. If we're looking at things like transportation costs, for example, which really hit a fever pitch back in 2022, but have been moderating ever since. So companies have been benefiting from pockets of disinflation. One area where you haven't seen the disinflation is, of course, on wages. Wages continue to be elevated, though we're starting to hear some reports by some of the business surveys that there's less upward pressure on wages. But at the end of the day, it really is the ability to raise prices and less about what's going on the cost side that is the biggest driver of margin. So if companies are going to continue to be able to raise that margin level, we'd like to see some kind of pricing power be maintained.
And Cameron, what does that mean for the small caps, that sort of backdrop that you just walked us through? Because you take a look at the Russell 2000, I mean, it's been a very impressive November so far, but how sustainable is that rally?
Yeah, that's the ultimate question. It's one of rotations and one of mean reversions, because small caps have been left in the dust this year. You've actually seen the most underperformance of small caps versus the NASDAQ since the tech bubble in the 90s. And so the question is, going forward, has enough changed that small caps could have a better day? I think we have to put aside a technical bounce. Small caps got really, really oversold back going into the end of October. And so some of this powerful rally is because of just being so oversold. But then it's the question of falling yields, because small caps are much more yield sensitive than large caps. They have more floating rate debt, they have more debt overall and in general, and they're more cyclical companies. There's a lot more unprofitable companies within the small cap index. So if we're in a world, and it is an if, where you have falling inflation, falling interest rates, and resilient growth, could that on net be better for small caps and set up for a catch-up trade in 24? I think it remains to be seen. And the one thing to remember is that if you were to have a recession, small caps would underperform. So it could look more like a trade and less like a sustained investment.
Well, you're getting at what I've been wondering, that even if we saw a catch-up of the small caps, maybe to the big mega cap tech names, the NASDAQ 100 and the like, is that enough to actually outperform? You think about all the things that have boosted, that have led to that degree of outperformance of tech, and it almost feels that in some ways that's sort of an all-weather asset class.
It feels like that now, but I think going back to the beginning of this year is a good reminder, because it was at the beginning of 23, after what was a bruising 22, that tech felt like a really tough place to be. You saw huge outflows from tech over the course of 22. Valuations fell materially by over 30%. And there was a narrative that you couldn't own tech in a rising rate environment, mostly for real interest rates. And the end result is that it was a low bar, and tech has outperformed huge this year. Now, all of that is opposite. You have much higher expectations for tech earnings growth next year. You have this idea that valuations have gone up a lot, over 40%. Now positioning is crowded. So given how strong the narrative is that tech is the only place to be, we would ask the question, if tech not going up as much or not outperforming could be the big pain trade of 2024.
Well, Cameron, hope to check in on that with you soon. That is Cameron Dawson. She is Chief Investment Officer over at New Edge Wealth. Now coming up, we'll break down today's closely watched 20-year Treasury auction as the bond market advances towards its best month since March. We'll do that with Jerome Schneider. He is Managing Director and Head of Short-Term Portfolio Management and Funding over at PIMCO.
Plus, a new acquisition could make the Professional Fighters League a true global rival to the UFC. Don Davis, chairman and co-owner of the league, going to be joining us a little bit later.
And turkey stuffing and a side of Ozempic. We're going to talk about how weight loss drugs are disrupting Thanksgiving dinner. All that and more coming up. This is The Close on Bloomberg.
That's me, Max. What's up? How are you? I have been writing about Wall Street for almost 15 years. And what that means is I write about feuds and rage and rises and falls and comebacks. And every now and then, I also write about a couple of villains. Thank you so much. And now, I am about to do something new and very, very scary. We are making a show, and it's based on Bloomberg Businessweek magazine. So what is this show about? It's a show about money, power, culture, pop business. We're gonna ask complicated and profound people about their ideas, their careers, their lives, their risks, their failures, their imagination.
It's so incredibly liberating not to care what other people think.
I was giving my tools to other communities. I wanted to bring those tools home.
Tune in. Please, really actually tune in. I desperately need an audience.
When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers Jobs Day like Bloomberg.
Welcome back to The Close. Just about 43 minutes until we get to those closing bells here. You take a look at the green on the screen behind me, defying a lot of expectations that 3-week-long rally that we've been seeing in U.S. markets had run its course, at least not for today. There are a few names on the back foot, but these are more idiosyncratic stories that surround earnings season, stories that surround management changes, and more importantly, stories that surround valuation. As far as technical levels, an S&P 500 firmly above 4,500. In fact, at 4,555, just about 30 points or so away from its year-to-date high, if you can believe it. The Russell 2000 trying to participate, not outperformance, but certainly keeping pace with the rest of the market here on this Monday afternoon. A market still driven by some of the macro conditions, and more importantly, a market still driven by what we're seeing in the Treasury space here. A relatively solid 20-year auction emboldening both Treasury investors as well as equity investors alike here on this Monday, providing some evidence here that the rally still has further to go. Let's bring Abigail Doolittle into this conversation, as we do every day at this time, for our Options Insight segment. And Abigail, you've been taking a look at oil and volatility.
Well, oil itself has in fact been extremely volatile, Romaine. We do have it up today, up for a second day in a row as traders eye that upcoming OPEC Plus meeting. But relative to the recent whipsaws off of the summer low to the peak just a couple months ago, up 40%, and then down 13%, up 13%, down 13%. Right now, we're up 8% from that bottom. The question is, what's ahead? Carly Garner, founder of DeCarlyTrading.com. You really strike me as somebody who can answer that question. You are, of course, an expert on commodities and options. So these whipsaws for oil, and I think net on the year, it's basically flat. It's really exhausting as traders try to figure out what's going on relative to the real world demand, world of demand and supply, and then, of course, the inflation story. Where do you think oil's going next?
You're right, it is exhausting, and unfortunately, I don't think it's going to get any better in the short run. We're going into an interesting time of year for oil, one that's been historically fraught with quite a bit of volatility. I like to say the crude oil market is extremely crude during Thanksgiving week because it just generally is. During this week, we generally get a futures expiration. The December contract is going into first notice day on the holiday itself on Thursday, the 23rd. We have an OPEC meeting over the weekend. On I believe Sunday is the day they're meeting. And then you combine that with holiday light volume and shortened trading sessions, and it's just a recipe for crazy things to happen, and they often do. So be really, really careful. In the big picture, I think oil's basically comfortably trading between 66 and 100. Unfortunately, last week what we saw was some liquidation of erroneous buys by speculators. People jumped on the narrative that OPEC supply cuts and then the war in the Middle East would cause supply disruptions that push prices higher. And unfortunately, a lot of buyers got in at unsustainable levels, and now they're liquidating, and so we're seeing a little bit of a flush. Chart work tells me that we're probably going to have one more round of selling that puts us around 68 to 66 based on both monthly chart and daily chart support levels. So we'll be willing to get aggressively bullish at those levels. But from these levels, we're basically looking to be relatively neutral. Okay. We do have an idea on how to play the upside with limited risk, though, for those that want it.
Well, before we talk about that idea, and I'm looking forward to hearing about it, let's bring the dollar into this. So if oil does go down into the high to mid 60s, and technically it does look poised to do that, do you think that that means that the dollar in the near term is poised to climb? And then if you were to get aggressively bullish, is that also a bullish call, or excuse me, a bearish call on the dollar over the longer term?
In the short run, I think the dollar and crude oil have decoupled a little bit, so I'm not worried about what the dollar does and how it affects crude oil in the next couple of weeks. In the longer picture, I am. I do believe that the dollar index is on its way into normalization. And what I mean by that is I think we head towards the 199 area, and if we break below that, we start getting into normalization territory, which is basically a green light for everybody to unwind that short Treasury, short stock, and short commodity trade. So I do think eventually the lower dollar is going to buoy almost all asset classes.
And if we have oil going back to $100, it might bring that inflation question back into the picture, and then maybe the Fed, a very circular picture. And then very quickly, Carly, how do you trade oil for a longer bullish picture that you're thinking about?
So if you feel like you need to have something on the upside, like I said, you don't want to have unlimited risk this time of year. It's just a little sketchy the next couple of weeks, but you can do it with a call butterfly. February options, buy the 80s, sell 285s, buy the 90. You get a range trade. Your risk is about $800. You can make as much as $4,000. There's no margin. It's not a perfect scenario because butterflies require that you hold almost expiration to get any money out of them, but the idea is you get a foot in the market without having sleepless nights and ruining your holiday.
Great perspective, and yeah, we certainly would not want to ruin anybody's holiday. Great perspective on oil, the dollar, and bringing rates in just a little bit. Carly Garner, founder of DeCarly Trading, thank you for joining us for Options Insight today. And from New York, this is Bloomberg.
The younger generations are more, of course, pay more attention to sustainability, and so they are looking at brands that are greener. But you have to make sure you're authentic because they hate greenwashing. But what is very important to remember is that none of them, whether they're young or not, will ever sacrifice product quality and efficacy to sustainability, which is why part of the big transformation of our R&I, where there's this €1 billion we spend every year, most of it is spent on transforming our formulas from petrochemicals to biosourced ingredients and green sciences, but without losing the efficacy.
Thanksgiving dinner may look a little different this year with people on weight loss drugs like Ozempic and Wegovy trimming down how much they eat. Apparently, monthly prescriptions of GLP-1 drugs have soared roughly 300% in the last 2 years alone. And Romain, I have to admit, I haven't necessarily been following the science, but the way that these drugs work is they signal to the brain to basically pump the brakes on appetite. People have said that they basically cut out their thoughts about food, and that's why you're seeing these huge results and all this hype.
Well, that's good. Can you just go off of it for just like a couple days so you can actually enjoy Thanksgiving and feast on the bounty that was intended for us?
I'm sure that you might end up with tummy ache afterwards, to use the scientific term.
The scientific term. You're all about the science today. Did you see they did the pardoning of the turkeys today? Well, Biden does it early because you remember they used to do it like way, but I guess he's got things to do.
Right.
But Liberty and Bell, they were the names this day. And I don't know why we didn't have wall-to-wall coverage of this.
Yeah,
because
we
to
did
me
for the
this
pandas.
is big. Yeah, I don't know. I mean, this network is just, I don't know what the priorities are around here. But we talk about, look, if anyone comes over to my house for Thanksgiving and they start complaining that I can't eat because I'm on Wegovy or Ozempic or Mounjaro or Zepbound, I'm going to show them the door.
Wow.
Yeah.
So that's a hard red line.
Yeah, you bring your appetite. You walk in the door of the Bostic household.
Yeah, so I mean, we'll see. I don't know. I think that maybe this story is a little premature. I know that we've seen a lot of hype in the last couple of years, but in terms of whether it's actually having an impact this Thanksgiving,
can you imagine turning down your grandmother's cooking?
This is
what
the
kind
close
of person are you?
on Bloomberg.
Paul Jacobson assured me that when he takes the new Hummer EV on long journeys, it's not just fun to drive, it's equipped to go the distance.
I hear so much about road trip anxiety that I wanted to experience it myself. My family likes to drive a lot, so I brought my daughter home from college in this, and it was great. I mean, the computer system is all intuitive. It tells you how to keep track of the battery. It tells you where the charging stations are. It tells you how much power you'll have when you get to the charging station. So it really puts a lot of your anxiety at ease. But as far as driving it, it's a treat.
So where are you on the charging stations? I know General Motors has made an investment in one company. How are we doing in this country generally in getting charging stations in?
So I think this is an area where obviously we can continue to improve as a country and a society. We're doing our best. We've committed almost $1 billion to EV charging. So we've taken that and looked at home charging solutions, local community solutions, and road trip charging solutions. With my daughter, what we would end up doing is probably stopping, grabbing a bite to eat, plugging it into a charger, usually a high-speed charger, to get as much charge as we can, and being there for 20 to 30 minutes. Get us a lot of range, and by the time we've used that range, we're tired, ready to stop again, etc. So it was a really good experience for me, and it's taught me, number one, what are the concerns of the consumer that are ultimately going to drive our vehicles, and then number two, where do we need to focus on addressing some of those anxious points for people?
global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that shortly.
Don't miss Bloomberg's interview with the
This is the countdown to the close. Just about 30 minutes left to go here in the trading day.
And we're looking at a big, broad rally on our hands, especially if we take a look at the S&P 500. You take a look at the sector level right now. This circle, it's almost all green. There's a little bit of red in there, but you can see really you have 10 of 11 sectors in the green right now. Up at the top, you have big tech up by 1.7%. We know Microsoft having a great day. Communication services and real estate also leading the charge as well. You go down the list, there's not too much to pick on, but utilities in the red today, off by about 0.1%, Romain.
All right, another big stock that I've been keeping an eye on is Boeing, having a wonderful day, up about 5% here as investors now starting to bet here that some of those supply chain issues might actually be behind the company. An upgrade here on Wall Street, the second one that we've seen in just about a week and a half's time, underpinning this big move that we've seen in the stock. Meanwhile, Packaging Corp and the rest of the packaging stocks are lower on the day. That includes International Paper and WestRock. We're learning now that benchmark industry rates have been cut now for a sixth time during this current cycle here. That's unprecedented. We haven't seen anything like that in at least about 30, maybe 40 years here. That's underpinning the move lower that we're seeing in the stock. And keep an eye on Trip.com. We're going to get earnings out of that company after the bell. Remember, this is the travel company, and most of their revenue actually comes from Chinese travelers, primarily Chinese outbound travelers. So it'll be interesting to see if we can get a read here on the health of the Chinese consumer. And energy down about 2% here on the day after their CEO, getting the boot here, Elliott Investment here, had taken an activist stake in the company, advocated for the removal of the CEO. That CEO now gone.
All right, well, let's switch from some of these individual stock stories to the Treasury market, because you're seeing yields fall. The market overall extending its advance towards the best month since March, and that's continuing after a $16 billion sale of 20-year Treasuries posted some solid demand. Joining us now to help break it down is Jerome Schneider. He is PIMCO Managing Director and Head of Short-Term Portfolio Management and Funding. And I know you're a short-term guy, but let's talk about some of these long-end auctions, because, again, a strong showing at today's 20-year sale. You reminded me in the break, it was just 2 weeks ago that we had that very sloppy 30-year sale, and the narrative there was that there's all this concern about how much Treasury supply there is. What changed in 2 weeks?
Well, investors are basically focused on two things at this point in time. Number one, they're focused on continuing data and the evolution of inflation. And then the second component, which is actually related, is the term premiums in the market. And the second component of that term premium, aside from inflation, is the supply to come. And so a few weeks back when the 30-year came, it was unsettling because of the notion that they tailed in the auction, and that was, quote, indicative of lack of demand for those auctions. But today we actually see a good result of those auctions. The 20-year point, which is, again, at the longer end of the curve, came quite through and was very strong. It was a very high grade from our marks, came through the auction by a little less than a basis point. But it's indicative of the wavering sentiments within the broader marketplace with regard to how supply is going to come into the market, be reconciled with ongoing inflation expectations or lack thereof, and then ultimately, what is the shape of the curve and how is it derived from that term premium again? So it's a bit circular in nature, and ultimately, this is not something that the market is going to react to in any one data point, and nor should we suggest that. But overall, look to the recalibration to come with a growing supply that the Treasury has announced, in addition to the evolving inflation dynamics to come. Those two things are really most important, other than just simply one bespoke print within an auction as we saw today.
So, Jerome, that's the picture at the long end, and it's a pretty turbulent one. But let's take it to the very front end of the Treasury curve, because there's also been an increase when we think about some of those bill sales as well. How has that been received by the marketplace, that increased supply?
Quite well. In fact, we've seen that supply really get digested as a replacement for the high number of assets that were in the Treasury's, the Federal Reserve's reverse repo facility. Right now, that reverse repo facility is about $1 trillion. It came down from about $2.5 trillion and really was surpassed by moving moving from that reverse repo facility into bills. Not a lot of friction. And in fact, bills have outperformed in the microcosm of late. But I think what's more important, Katie, here is to take a moment here. And in fact, tomorrow is a bit of a menu to be presented by the Federal Reserve with the upcoming minutes. And really what we're going to be focused on the front end is the evolving situation with regard to how the Fed is determining the next steps. In fact, hopefully what we're trying to glean from the Fed minutes tomorrow is the fact that what was it that changed their course to going from expecting another rate hike in the September dot plots to perhaps putting it on hold. And in fact, that's what is going to be driving front-end rates in the near term. And effectively, if the Fed is on hold and what the Fed foresees is going to be sort of a recalibration. Was it tightening financial conditions? Was it an outlook for inflation? Yeah. How does that reconcile? And ultimately, it's going to be something which may or may not pertain to the very dovish outlook for the market at this point in time in the form of rate cuts in 2024.
I'm curious as to how hard it's going to be to get a read on that, Jerome, because we talk about this idea of how data dependent the Fed was. And we saw the market really trying to front run the Fed with every economic news release. And Jay Powell and quite a few others, including Neil Kashkari, have kind of made it clear that they're kind of, to a certain extent, operating from the gut at this stage of the cycle.
Well, what's interesting, and you're exactly right, Romaine, what we basically learned at the last Fed press conference was that the Fed shifted from a data-dependent mode to one of relying upon tightening financial conditions. Oddly, and perhaps unsettlingly to the Fed, those financial conditions have actually eased through the form of lowering rates and tightening credit spreads, as well as equity markets that are rallying. And so what they relied upon to sort of give themselves a pause and not necessarily suggest future rate hikes has actually reversed itself in the near term. And so we might actually find itself that we might hope for inclinations that the Fed is still open-minded to some data dependency on a go-forward basis, and more importantly, understand that the market's calculus of a dovish reaction function in the near term, specifically in the second and third quarter of next year where the Fed rate cuts are priced in, might actually be a little bit more aggressive than actually the Fed wants at this point in time. So reading the tea leaves, reading between the lines is going to be remarkably important in the Fed minutes tomorrow. And then on a go-forward basis, clearly the inflation discussion is ongoing, at which here at PIMCO, we think we should be focused on those wage pressures that will be continually to be a little bit more persistent on a go-forward basis than most expect.
This raises the question, Jerome, about heading into 2024 and whether we kind of see a repeat of investor sentiment and investor positioning that we saw in 2023. What changes that, if at all?
Necessarily, the calculus has changed. I think a few things have ultimately changed. Number one, the cost of capital is higher. That's the main purpose of the calculus changing. The second one is, I think, from a practical perspective, the liquidity conditions were relatively benign in 2023. The outlook for 2024 might be a little bit more unsettled, perhaps. And I think part of that comes to do with the fact that we have a decreasing amount of excess dollar reserves in the marketplace. We're currently at $3 trillion of excess reserves. And as that declines, we might find that there's a more competitive nature to finding dollar liquidity along the way. And that can be reflected through asset prices, risk premiums, et cetera. And so as a result, the outlook, which was clearly focused on a rising rate environment, but ultimately proved to be a hardy risk-taking environment in 2023, might be a little bit more unsettled for 2024, hence warranting the defensive posture that we have here at PIMCO for the outlook at this point in time. Again, not suggesting a hard landing, but suggesting that the probabilities of recession are a bit higher than the market's expecting at this point in time, as portrayed by the calculus of the soft landing discussion. So it's something that we continue to need to reconcile, and perhaps investors need to be thinking about how to be more practical about being defensive. Clearly, the front of the yield curve is attractive from those rate perspectives, but we could be in a situation of higher rates than the market expects at this point in time.
Well, Jerome, 30 seconds. You mentioned the very front end of the yield curve. You take a look at money market funds, $5.7 trillion. It seems like nothing has been able to stop that flood of cash. When does it finally maybe start to cool off a little bit, that demand?
Well, that demand has actually become very robust simply because of the risk-off uncertainty outlook. And what we were basically suggesting is that investors look at the totality of fixed income within that 0 to 5 year space, the front end of the yield curve, for a little bit of safety, understand that there could be a little bit more recalibration in the term premiums in the longer end. But in general, that fixed income opportunity remains a highly competitive, more important income-producing opportunity in as we approach 2024.
All right, Jerome, it's great to catch up with you. That is Jerome Schneider, of course, of PIMCO. Thank you so much. Now coming up, the top three. It's our news segment where we focus in on the top three movers and shakers at the center of the day's biggest stories. That's next. This is The Close on Bloomberg.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
Today's CFO has to be much, much more than a bookkeeper.
One of the most important things is looking around the corner.
We have to let go of the traditional legacy department store.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
You also have to be credible business leaders in order to really impact the business and steer the direction.
We are like biologists. We need to deeply understand the financial DNA of a company.
People just come with a playbook and say, okay, we're going to roll that. Don't do that. Think longer term.
It's an amazing time to be in this role. It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the chief future officers of some of the world's most influential companies. A new episode every month, only on Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
DOJ or other authorities
could face bigger challenges.
Britain's next. Fed was going to keep rating World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Time now for the top three. Every day at this time, we do a deep dive into the people at the center of today's top stories. And joining us now is Scarlett Fu. Scarlett, who do you have your eye on?
It's someone at the top of OpenAI, not the guy who left OpenAI, but the new guy in charge, Emmett Shear. He's a new interim CEO. It's not exactly clear what OpenAI is now that Altman is gone, and it looks like 700 of the almost 800 employees there are ready to follow him to Microsoft. But Emmett Shear has made some controversial remarks on Twitter in the past, one of them on women, which we won't get into here, but another on how interning at Microsoft at one point felt like he was losing a bit of his soul. Kind of awkward, given where things are now.
Yeah, I feel like some of these are going to come back to haunt him to a certain extent here. But it gets to this whole issue, too, is this it? I mean, OpenAI is just, Sam Altman's just moved on. Satya Nadella's got his guy, and that's all he cares about.
It's like a shell of a company now, isn't it?
Yeah, I mean, yeah. And
it's a concept. There you go.
And I think I asked this question at one of our meetings. I mean, it kind of gets to this idea here of like, what's most valuable there? Is it the human talent, or is it the actual technology, and who actually has a claim to it, OpenAI or Sam Altman?
I feel like this is a really good segue into Jane Fraser.
Into Jane Fraser?
Yeah.
Have you been following this story?
About what's going on over at Citi?
Yeah, let's get to our number two person of the day here. And really, this is less about Jane Fraser in and of herself. It's about Mark Pagano, who headed the EM credit desk over there. It's about Adrian Liu and Dirk Kaiser and quite a few others who have now basically moved on, whether they went voluntarily or whether Jane Fraser actually gave them the boot. She made it clear a couple months ago, early October, put out that presentation saying, look, there are 13 layers of basically governance at the company. And she said, we got to get that down. So we're going to remove 5 layers, get it down to 8. And she has all the heads of all the departments basically saying, justify why you have so many managers here.
A slimmed down Citigroup with 8 layers still.
Yeah.
I was looking, and Citi has the lowest price to book ratio of all the banks in the KBW Bank Index.
Yeah.
That's a lot of banks.
Yeah.
It's got a 0.46 PB ratio, and just by comparison, JP Morgan, the richest with 1.52.
I don't know, Romeo said 13 layers and I blacked out. But number 3, let's talk let's talk a little bit about soccer. I am watching an Argentinian, not the one you may think. We're talking about Leo Messi. No, apparently Sotheby's is auctioning off a set of 6 shirts rather than he wore at last year's World Cup. The estimates for the set are in excess of $10 million. Remember, the record was set by Michael Jordan's 1998 NBA Finals jersey. That sold for $10.1 million.
It's hanging in Romaine's home.
There you go. Yeah. So if someone surpasses that, we have a new record.
Yeah, I guess he could surpass that. I mean, he's up against actually one of his own countrymen, right? Wasn't the Hand of God jersey also one of the biggest selling ones? Diego Maradona. That sold for like $9 million or so. I know that was a little while ago, but how much are you going to bid?
These are hard assets.
Hard, yeah.
We're counting you down to the close. Stick with us. This is Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacqua, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
What are some of the measures the government are working on in terms of addressing the artisanal challenges there?
Oh, a host of them, but fundamentally hinged on 2 policy pillars. One is reformation, which is reforming the sector, licensing regime, getting them equipment for the extraction of the gold from the ore without the use of mercury. As you know, we are parties to the Minamata Convention, and therefore we respect the dictates of the Minamata Convention. And then the enforcement regime, deploying law enforcement to make sure that people are arrested and so on and so on. So we're making that effort. But my point is that my fundamental point is exploiting these mineral resources in a sustainable manner are not mutually exclusive.
Yep.
I think that they can peaceably coexist. You can exploit the resources, and several countries have done so. I don't want to mention, give examples, but I know of countries which have gone about their mining sector and their mining industry in a manner which is also protected the integrity of the environment and the climate. We can do all of that. My friend Josephine mentioned the day we'll use solar to mine and use gas and all of that. These are all very ambitious technological interventions we can rely on. And Ghana is doing just that.
This is Daybreak Europe. I'm Kriti Gupta. Let's get to the stories that set your agenda.
Taking you from the U.S. market's close
A lot of this was priced into the U.S. session.
to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
Best question I get all night.
Bloomberg, top experts, great questions.
Breaking news here on the saga surrounding OpenAI and the departure of Sam Altman. We're now learning that Mark Benioff, of course, the head's Salesforce, openly asking OpenAI researchers to join Salesforce's AI team. Scarlett, I have a feeling that we're going to hear a lot more of this. We already know that Satya Nadella has gone after a few key players that were part of the OpenAI ecosystem, and there have been a few other public CEOs that have already been public saying, hey, the door is open for you. My guess is the door is open for a lot of these folks if they're willing to walk.
Yeah, although it's a little bit curious, the timing. I feel like he's 6 hours, 7 hours too late.
Yeah, I mean, maybe he was busy with one of the many other things he can do, but it does get to just how messy this is, right?
Yeah.
I mean, and we don't know all the details. I mean, obviously we have the contours of why he got pushed out, but also the idea here that a lot of people seem to support him. We talk about all the employees who are threatening to basically walk off.
Yeah, 700
if the
out of the
board
almost
isn't done it.
770. Yeah.
And this could be a big issue, and it makes you wonder sort of what the future of OpenAI as a standalone company or nonprofit, I should say, is going to be.
Well, probably not non-for-profit for long. I can't wait to read the TikTok on this eventually when hopefully someone from Bloomberg, but maybe like a Michael Lewis writes the book on it.
The TikTok? Oh, I thought you meant the actual
yeah.
TikTok, not like TikTok, because the last thing I saw on TikTok was everybody doing this Bob Dylan challenge.
Oh.
Are you familiar with this thing?
I am not.
Okay, yeah, I'm a puffy coat guy. But anyway, let's get back to the markets here. Microsoft having a pretty good day. Remember, on Friday, it looked like Microsoft was going to tank because everybody said this was a big part of the upside story. But, I mean, you got to hand it. I mean, Microsoft is really not a fundamental story. It's not even a technical story. It's really a management story and how Satya Nadella has guided this company since he took the helm.
And he kind of lucked out with this latest development because it looked like it was going to be a disaster on Friday, and now he's worked everything out to the benefit of Microsoft. What's interesting to me is how we've swung from I can't get my words out today. Oversold to overbought in the span of 3 weeks for the broader stock market. Now just hanging out right above that 4,500 level, right below the overbought level on the RSI. What happens next? The data today that we did get, what does it show? The economy is slowing, so what? Bad news is good news? The Fed's not going to do anything? I guess that's the read on it.
Yeah, we're going to find out. Let's get right to our next guest here as we count you down to the closing bell. Mona Mahajan joining us, Edward Jones, Senior Investment Strategist. And Mona, let's start off with that forward look into next year here. I thought the Fed was out of the equation.
Yeah, look, I think there is ample reason to think they're at least stepping to the sidelines here. We think there's a trifecta of kind of good news that's propelling the market. And of course, first and foremost is inflation. And it's not only headline inflation. We see better trends emerging in core inflation as well. It won't be in a straight line lower, but we will see moderation in areas like housing and shelter. We think will show up over time. We think areas like the softening in wage gains will show up in shelter inflation as well. So better news in inflation. We do think better news on interest rates broadly, and we think the Fed is a key driver in that. Not only can they step to the sidelines, we do think over time they can pivot to rate cuts. And then the third one, which we think, we're calling almost like a Goldilocks cooling in the economy, which you both alluded to just now as well. It's not too hot, not too cold, but we are seeing gradual cooling. We're seeing it in consumption. We're seeing it in the labor market. And that gradual cooling, accompanied with perhaps no deeper prolonged recessionary environment, is positive for the markets.
Do you think that kind of what helps to explain the big rally that we've seen basically going back to late October to where we are today? I mean, just looking at the S&P 500, I mean, we're basically one big gain away from reclaiming that year-to-date high.
Yes. Yeah, absolutely. And look, it was a nice technical setup. We had technically gone into a correction territory in the S&P 500 towards the end of October, down 10% plus. NASDAQ was down even more, and the Magnificent Seven was down 12, 13% itself. So that setup heading into a seasonally strong November and December, combined, of course, with the better inflation trends we've been seeing. The language out of the Fed as well, they did set a more balanced tone, we think, in the November meeting, calling the risks to the upside of doing too much versus doing too little on rate hikes more balanced. And so we do think inflation, the Fed tone, and then, of course, we have to follow the fundamentals. What did earnings season tell us? Well, we did get an earnings season that was above expectations, as it typically tends to be. So we were up 3 to 4%, the first positive earnings growth season since the last, over the last 3 or so. So this is an inflection point in earnings that we think can continue. So 2023, pretty flattish in terms of earnings, but 2024, we do think 5 to 10% earnings growth seems likely again. So better earnings environment in 2024, combined with a Fed that could start to pivot lower. That's a pretty good backdrop for both equities and fixed income, we think.
So I want to hone in on some of the earnings because, of course, we've got NVIDIA reporting earnings tomorrow, and a lot of expectations built into this company, another beat and raise quarter. But is the bar high or is the bar low at this point, given that it's the best performer in the S&P 500? It's gained 245% year to date. But since its last earnings, when it reported a massive jump, the stock is only up about 7%.
Yeah, I do think a lot of the expectations are starting to rise for NVIDIA, and clearly tomorrow's quarter, by any standards, will probably be a superb one. To your point, revenue growth is expected to be over 150% year-on-year. Earnings and EPS growth is expected to be up over 400% or so for NVIDIA tomorrow. So it'll be, another stellar quarter. Whether or not that is already reflected in the price is the key question. And we do think with NVIDIA up over 200% year to date, the broader Magnificent Seven up over 60%. A lot of the valuation is starting to seem, probably not as favorable as compared to what you see in the S&P 493, the rest of the market, which is actually trading well below long-term averages. And so when we look out, the next 12 to 18 months or so, we do think the laggards in the market have an opportunity to play some catch up. Now, we don't wholesale abandon the AI trade because, to everyone's point this week, it is in the early stages of what we think is a long-term secular bull market. But fully valued, and you may get better opportunities to get involved. So we think the opportunities come from the laggards. Yep.
How closely are you watching the Treasury auctions? And I bring that up because of the 20-year auction today. $16 billion, relatively small, but better than expected demand for a tenor that is kind of, it's a little bit weird, right? It's definitely not one of the more highly bid tenors.
Yeah, we do follow the Treasury auctions now pretty closely. We are looking at the supply and demand side of what's happening in the Treasury market. Of course, we know a lot of supply coming to market, over $3 trillion this year and probably more next year. And on the demand side, the Fed had been a big buyer of Treasuries. Of course, QT has put them to the sidelines. We also see economies like China, which had been big buyers, they are slowing, but the rest of the world is stepping up. I think the U.S. Treasury yield, even at 4.5% or so, very attractive for long-term investors who are looking for a deep liquid market that is still backed by one of the most powerful economies in the world. So we are more comfortable that despite some of the headwinds to demand, we'll continue to see stronger auctions ahead, especially given that yields still remain somewhat elevated.
Mona, always great to talk to you. Have a wonderful Thanksgiving holiday. Mona Majan there over at Edward Jones, helping us count you down to those closing bells. Just about 2 minutes to go until we get there here, with stocks off the highs of the day, but still holding on to some pretty strong gains, setting up for what could be a fourth straight week of gains. Stick with us right here on Bloomberg as we take you to the bell and beyond.
Beyond the bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Scarlett Fu. We're counting you down to the closing bell, here to help take us beyond the bell. It's a global simulcast with our friends Tim Stenovic and a distracted Carol Masser. Welcome to our audiences across our Bloomberg platforms, television, radio.
The OpenAI news, that's all. Trying to keep you informed, kiddo.
Originals and our partnership with those folks, Carol Masser, yes, still streaming on YouTube.
Romaine never misses a beat. Gotta love it. Interesting rally today. We're just rolling over our highs of the session. I know, like you guys, we too have been all in on this OpenAI story. We just had a great guest
Mark Benioff?
No, I know, right? Don't you think about that? I think about Google saying, Mark Benioff, they're all saying, hey, do you want to come work for me?
Yeah, I mean, this is talent in what is arguably the hottest sector of tech right now. Of course, you're going to try to poach those folks.
Exactly. So that'll be interesting to watch those headlines. I want to mention that Greg Halter, he's over at Carnegie Investment Council. They've got about $4 billion in assets under management. He's like, we're not quite sure how this story is ultimately going to end. Who's going to be the leaders and kind of setting the modes when it comes to generative AI? But what he's thinking about is companies like Stryker, who are going to be using AI in the future when it comes to replacement medical devices, hips. Eaton, which is all about electrical products, right? They're going to be the backbone in terms of data infrastructure. Or Accenture, that's hitting a 52-week high today. This is a company that others are going to be tapping into, right, Tim, when it comes to what do I do with AI? What do I need to do with AI?
Yeah, speaking of those companies, we spoke to Crawford Del Pret over at IDC earlier in our program, who told us all about AI. The future of tech is at stake here, likening it, Romain, to what happened in the early parts of the dot-com boom and the winners and losers who were separated there.
Yeah, absolutely. Here, let's walk through the numbers here as we get the closing bell here in New York City with the Dow Jones Industrial Average and all of the major indices posting gains on the day to start the holiday shortened week. The Dow up 200 points, or about 0.6%. The S&P coming off 3 straight weeks of gains, looking to extend it to a fourth, higher by 33 points, back around 45 and change, up about 0.7%. The NASDAQ Composite up about 159 points, or more than 1% on the day. And the Russell 2000, while it is the relative laggard, still posting a pretty decent gain on the day of 0.5%.
Hey, one thing I want to mention, an outperformer, those Chinese names that trade in the United States, the NASDAQ Golden Dragon China Index up about 3.5%. We did have Scarlett, China pausing rate cuts. They're going to shift to credit stability in that country. So we did see a rally and a move once again into those names.
Yeah, it's a little bit of a throwback there, Carol Massar.
I know.
She's not going to forget about those names.
No, never. I know she always has her eyes on those. Let's take a look at the group movers here. Not a whole lot of drama on such an up day. You have 24 industry groups and all but 2 finishing higher. And of course, the leaders here are software, and that's basically Microsoft. You also have semiconductors. NVIDIA, of course, will be reporting tomorrow. Telecom gaining 1.2%. On the downside, 2 groups in the red: household and personal products and utilities. These are classic defensive sectors. You could see them finishing down by at least 1/3 of 1% each.
All right, folks, let's get to some of the individual gainers. Got to do, of course, Microsoft today. Just finishing off its highs of the session, still about a 2% gain, and hitting a fresh all-time high, I think closing at an all-time high as well today. Had to do, all the turmoil following OpenAI, Sam Altman out, Microsoft ultimately doing kind of its own coup and saying, hey, Altman, come on over. He's one of the co-founders, along with Greg Brockman, to lead a newly formed in-house AI research unit at Microsoft. So Microsoft in the thick of this, big investment, as everybody knows, earlier this year in OpenAI. So that name finishing up about 2% on the day, really helping provide some support there in the NASDAQ on this Monday. Also, interestingly enough, solar stocks rallying in a big way. They've had a brutal earnings season, but nonetheless, investors giving it some love. If you look at the Invesco Solar ETF, it was up about 3% in today's session, still down almost 40% year to date. Enphase specifically, it was the number 2 gainer in the S&P 500, number 1 gainer in the NASDAQ 100, and that one is up just about, we're going to pull up the board for you, I think, on Enphase. There we go, up about 6% in today's session. The president and CEO of the company buying about $100,000 worth of shares, according to the SEC, and also some analysts weighing on the company, expecting the next few quarters to remain weak. They talk about an inventory destocking process is completed, but they do say positive signs for the stock are materializing as investors look for the bottom. One more in terms of the renewable energy phase. Renew Energy is about a $2.5 billion market cap company. Wind, solar, hydro in India. Basically, that's where all their clients are. And that one was an outperformer, up about 8.6%. It's an ADR. It's up about 18% year to date, guys.
All right. Well, not easy to find notable decliners with today's widespread market move higher. But I want to start with Bristol-Myers Squibb, among the worst performers on a percentage basis in the S&P 500, down more than 3.8%, sinking after Bayer stopped a trial of a competing drug.
The Bayer news is that it stopped a late-stage study of a drug for a lack of efficiency, or efficacy, I should say. An analyst said that could cause Bristol to dip because of its development drug of milvexian. Also, speaking of AI, C3 AI shares falling today. This after investors learned that the company cut workers last week. That news just coming out today, citing employee performance and the need for cost savings. Shares were up more than 8% before news of the job cuts. Shares fell today 4.3%. Bloomberg News reported that employees were fired across departments, according to people familiar with the matter. The stock up about 150% so far this year. And then NRG Energy Inc. Announced that it's replacing its CEO following a dispute over the company's $2.8 billion acquisition of Vivint Smart Home. NRG Energy named Chair Lawrence Coben as interim president and CEO as the company begins a search, Romaine, for a permanent CEO of the company.
I've always felt that name was weird. It's NRG Energy.
I know. Couldn't they have just let it be NRG?
Yeah,
Energy?
exactly.
Yeah,
exactly.
I agree. Okay, we're not the only ones.
Maybe that's why Elliot is involved. Anyway, let's check in on what's going on in the bond market here. It was kind of a flip-flop day in Treasuries. It started off here, and it looked like we were actually starting to see a pretty significant sell-off earlier in the session here. But that flipped largely on the back of that 20-year auction at about 1 p.m. New York time. And I guess you can call this a resumption of the rally. Saved the 2-year, most of the activity on the longer end of the curve, with the 10-year yield lower by just about a basis point or two. The 20 and 30-year lower by about 3 basis points.
I've always been intrigued by the 20-year. I mean, because the yield is so much higher than everything else, and it was revived not so long ago by the Treasury. So there's not a lot out there.
I wonder too, because I mean, it's so many. It's funny. There's so many people actually say pay more attention to the 20-year. Obviously, it doesn't have the volume that you have on the 10-year or even on the 2-year here. But a lot of people are saying you get a little bit better read on investor sentiment on the 20-year and for that matter on the 5-year than you do on the 2 and the 10.
So what do you think investors are really kind of focusing? Obviously today we're all over OpenAI. I just see actually some tech earnings.
That's what
still
we're
reporting.
focusing on.
Yeah, well, Zoom is actually just reporting earnings.
Man, they look pretty good, Carol Masser. You want me to read them for you? 3Q numbers coming out right now as we cross the wire. Adjusted EPS at $1.29, Carol Masser. The street was looking for $1.10. That would be a beat. Revenue for the quarter also coming in pretty above estimates. 1.14 billion. The street was looking for 1.2. And here's your forecast. On a full year basis, revenue 4.51 billion to 4.51 billion is the range they given, and they previously saw 4.49 to 4.5, so a little bit of a nudge higher on.
So we're still zooming around, right? We're still doing making use of it. 7% higher here, Scarlett, in the aftermarket.
Yeah, a big question for Zoom, of course, is what happens when small businesses faced with higher rates and faced with slowing demand, are they going to continue to pay for this service? Because obviously relying on you and me to Zoom our friends does not bring in any kind of revenue for the company.
No, we're doing the free meetings and hanging out in person too. Go ahead, Romaine.
Well, I mean, this has been